let's start with the first one. The first chapter, you can see basic concepts of GST. That's it, one basic concepts of GST you can see. So I'm making a quick recap of everything, and if you have any doubts with respect to that, you can just put it in the chat box, and later on I will be able to clarify all your queries. So here in this first chapter, that's it, one basic concepts of GST. So we need to know when is GST implemented from. GST implemented with effect from 1/7/2017, and how GST is formed. GST is formed by subsuming various old indirect taxes, that is all indirect taxes levied in the past by central government except customs duty, so got subsumed into GST. And excise duty, service tax, central sales tax mainly subsumed into GST, and the CST, even though levied by central government but collected and retained by state government. Then customs duty is not subsumed into GST, that is outside the ambit of GST. However, we had additional customs duties like CVD and SAD, countervailing duty and special additional duty, to counterbalance this central excise duty and sales tax on imported goods. So whenever you are importing some goods, those imported goods will not be having this excise duty and sales tax. To counterbalance that excise duty and sales tax, so they have levied this CVD and SAD. And these indirect taxes which were levied in the past, so by state government, so only specified indirect taxes levied by state government got subsumed into GST, total 6, that is value added tax, advertisement tax, luxury tax, entertainment tax, betting tax, purchase tax, that is octroi. So these got subsumed into GST. However, entertainment tax levied by local authority not got subsumed into GST. So which means whether all indirect taxes levied by central government got subsumed into GST, yes, except customs duty. Then specified indirect taxes levied by state government got subsumed into GST, but indirect taxes levied by local authority not got subsumed into GST. And India adopted dual GST model. Dual GST model means what? So on the common tax base, both central government and state government shall levy. Okay. For example, if 1000 rupees is the common tax base, on this central government also will levy GST and state government also levies GST, and say the central government GST rate is 9%. So therefore CGST and SGST will be levied. So 1000 into 9%, that is 90 rupees will be CGST, and 1000 into 9%, so 90 rupees will be SGST. So this is about dual GST model, and India adopted dual GST model from Brazil and Canada. We adopted from Brazil and Canada, where both central government and state government has power to levy tax on the common tax base. And GST is levied in India via a constitution amendment. That constitution amendment is Constitution 101st Amendment Act 2016. Then next one is GST Council. So GST Council, Article 279A of the Constitution, as India follows dual GST model, means both central government and state government is having power to levy tax, means there should be a unified decision making body. That unified decision making body is GST Council, and GST Council derives its power from the Constitution, Article 279A of the Constitution, and it is headed by President of India. That is, it is constituted by President of India, but the head of the GST Council is Union Finance Minister, and State Finance Minister and MP of State Affairs in charge of the revenue, that is for union territories, are its members. So in total it is having 33 members. Mainly this GST Council is for what purpose? It is the decision making body of GST. And these types of GSTs, we have CGST, SGST, UTGST, IGST, and GST compensation cess. So this CGST is levied by central government, and that is on intra-state supply, and SGST is levied by state government on interstate supply. UTGST is levied by central government again with respect to intra-state supply. IGST is on interstate supply. So supply is categorized into two. So one is intra-state and another is interstate. So whenever the supply takes place within the state, that is location of supplier and place of supply is in the same state or same union territory, it is known as intra-state. when the location of supplier and place of supply is in two different states, then it will be called as two different states or two different union territories, or a state and a union territory, then it will be called as interstate supply. So whenever it is intrastate supply, the combination of tax will be CGST plus SGST if it is within the state, or CGST plus UTGST, that is within the union territory. Whenever it is interstate supply, that will be IGST. So CGST, SGST and UTGST will come into the picture only when there is intrastate supply. CGST levied by central government, SGST levied by state government, UTGST levied by again central government only. Whereas IGST is applicable in case of interstate supply levied by central government. Next, we have something called as GST compensation cess. So this GST compensation cess will be applicable whenever government wanted to contribute to the loss of revenue on account of implementation of GST to the states. So central government is going to compensate the loss of revenue on account of implementation of GST to the states. So this compensation, so they have to pay. For that they will be levying a tax called as GST compensation cess. But this GST compensation cess is not on all goods. This is only with respect to notified goods. And this GST compensation cess is levied up to a period of 31st March 2026. That is an amendment. So previously it was for a period of 5 years and the 5 years got over. Now they extended it up to 31st March 2026. And here if you see how many union territories are there. So for 28 states, so for what are all the states for which SGST Act is applicable? SGST Act is applicable for 28 states plus 3 union territories. 3 union territories with state legislature. So that is Delhi, then Jammu and Kashmir, then Puducherry. For these 3 states, they are also treated like three union territories are also treated like states. And UTGST Act is applicable for 5 union territories. So the 5 union territories without state legislature: Andaman and Nicobar, Lakshadweep, Ladakh, Chandigarh, and Daman, Diu, Dadra, Nagar Haveli. For that UTGST Act will be applicable. Then next one, IGST is levied by central government, but whether it is collected and retained by central government fully, no. So out of that IGST collected, 50% will be transferred to the state. Which state? Consuming state based on place of supply. So 50% will be retained by central government and remaining 50% will be given to the consuming state, that is determined based on place of supply. Suppose if place of supply cannot be determined, it shall be paid to the consuming state. So wherever it is consumed, those goods and services are consumed, it will be given to that state. That is the place where recipient is located, that state. Then intrastate supply we have already discussed. If location of supplier and place of supply is in the same state, then it is intrastate. If location of supplier and place of supply is in 2 different states or 2 different union territories, or a state and a union territory, it is interstate. Generally location of recipient is considered as place of supply. So that we need to remember for the purpose of examination, that whenever in the question they have not given any information, the recipient location will be taken as the place of supply. Accordingly we determine whether it is intrastate or interstate. Then we have something called as zero rated supplies. Zero rated supplies means export of goods or services and supply of goods or services to special economic zone, that is known as zero rated supplies. And in case of zero rated supplies, whether GST paid on inward supply, yes, upon purchases. So I am making zero rated supply, outward supply zero rated, on purchases I will definitely pay GST, and that I can avail as ITC. Now upon zero rated supply I have 2 options. Option 1, I can export or sell it to SEZ, special economic zone, upon payment of IGST and get refund of the gross IGST paid. So whereas in case of option 2, I will export or supply to SEZ without payment of GST and I will get the refund of ITC. That is whenever I am making outward supplies which is zero rated. What is zero rated? Exports or supply to SEZ is known as zero rated. Whenever I am making zero rated, I have 2 options. Option number 1, that is I will pay IGST by utilizing the credit whatever I have, then I will get the refund of the entire amount. Or I don't have to pay any GST on outward supply, but on purchase already I paid GST, that I can get as a refund, that is refund of ITC. Ultimately the tax incidence of that person is 0, that's why it is known as zero rated supply. These are the important points that you need to keep in mind when it comes to first segment, that is introduction to GST. And the next one, supply. Supply under GST, so that is the taxable event. So levy of GST, taxable event under GST is supply of goods or service or both. This supply is given under section 7 of CGST Act. So section 7 is divided into totally 4. 7 subsection 1 talks about inclusion. 7 subsection 1a talks about classification of supply into goods or services. 7 subsection 2 exclusions from the meaning of supply. 7 subsection 3 central government on the recommendations of the council is empowered to classify supply of goods as supply of services and vice versa. That is, once we classify supply into goods or services, it can be reclassified as per 7 subsection 3, but right now under 7 subsection 3 they have not given any notification. So what we have is only these 3 subsections: 7 subsection 1 inclusions, 7 subsection 2 exclusion, 7 subsection 1a classification. So the list of exclusions are given in schedule 3. So therefore, whenever we need to write about exclusions from supply, we need to give reference to 7 subsection 2 read with schedule 3. And what are all the activities which are treated as goods and services, that is given in schedule 2. So whenever we are referring to 7 subsection 1a, we need to write read with schedule 2. Then next we have supply includes. So we are starting with 7 subsection 1. 7 subsection 1 supply includes. So in that 7.1a, 7.1aa, 7.1b and 7.1c, 4 clauses are there in the inclusions. 7.1a is any activity for consideration in the course or furtherance of business will come under 7.1a, whereas 7.1aa, any activity between a person other than individual and its members. So that is between company and its shareholders, or firm and its partners, or an unincorporated association and its members. So that will be covered under 7.1aa. Any activity between a person other than individual and its members for a consideration. The difference between 7.1a and 7.1aa is that 7.1a is the activity between two independent people, any person, whereas 7.1aa is between a person and its members, person other than individual and its members. So both cases it should be for a consideration, whereas 7.1b is import of services. This import of services must be for a consideration, and it may or may not be in the course or furtherance of business. And import of services, whether it becomes supply or not, we need to see from the recipient point of view. Examples of import of services becoming supply is Netflix, Amazon Prime, Zoom cloud meetings, or cloud storage, etc. These are all import of services. It may or may not be in the course or furtherance of business. If it is for a consideration, it will become supply under 7.1b. Then 7.1c, we have total 4 activities in the DRIP. D for disposal of business asset on which IT is availed. I purchase some business asset and I am disposing of that business asset without consideration. So 7.1c read with schedule 1. So there are total 3 schedules in CGST Act. Schedule 1 and schedule 2 and schedule 3. So schedule 1 is for 7.1c. That is, what are the activities which are treated as supply even though without consideration, that is given in schedule 1. Whereas section 7 subsection 1 capital A, that is classification of supply into goods or service, is given in schedule 2. Whereas section 7 subsection 2, that is exclusions from supply, are given in schedule 3. So this we need to remember. Now 7.1c read with schedule 1, we have total 4 activities, that is DRIP. And in all these cases, there is no consideration. Only when there is no consideration, we will come into 7.1c. And what are those 4 activities? D for disposal of business asset on which IT is availed. I purchased a business asset. At the time of purchase, I paid GST, and on that I availed the ITC. Now that business asset is disposed of without consideration. Then it will become supply under 7.1c. Number 2, R for related party transaction or transaction between distinct persons. So there are some related parties and distinct persons. Between them, if there is any transaction, that will come under related party transaction. I for import of services. Import of services from a related person or another establishment located outside India. And that is again in the course or furtherance of business. So import of services by a person from a related person or another establishment located outside India. Then P for principal agent transaction. But remember, principal agent transaction only in the context of goods. Now, these 4 activities are only covered under 7.1c and it will become supply. Whereas, suppose if an activity is not covered under 7 subsection 2, that is exclusions from supply, then we need to check 7 subsection 1. If the activity is not covered under 7 subsection 1 also, then it is not a supply. If an activity is not covered, suppose if the activity is covered under 7 subsection 2, which means it is excluded from supply, leave it. Suppose if it is not covered under 7 subsection 2, exclusions from supply, check in 7 subsection 1. In 7 subsection 1 also, if it is not covered, then also it is not a supply. Then, so 7 subsection 2, we are now discussing what are all excluded from the meaning of supply. So this is given in schedule 3. You have to remember this with a keyword, spelled slow. Yes, for sovereign functions of government, that is all activities of government other than the following are excluded from supplying. So what are the activities covered under supply with respect to government? That is Department of Post, airport or port services, transportation of goods or passengers, and services to business entities. These 4 activities are only treated as supply, and all other activities of government will be excluded from supply, that is sovereign functions of government. Then P for post. So P, post, that is government post, constitutional post and nominated post. Then A for actionable claims other than lottery betting gambling, which means only lottery betting gambling are covered under supply. Then L for legal fees, fee collected by court or tribunal. Court fees or tribunal fees will not be treated as supply, excluded from supply. Another L is land sale. So sale of land is excluded from supply, or sale of building where entire consideration is received after obtaining completion certificate of first occupation, whichever is earlier. If part consideration received before and part consideration received after, that is not excluded from supply. If entire consideration received before, that is also not excluded from supply. Only when entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier, then only it will be excluded from supply. Then we have E, employee to employer in the course of employment, that is excluded from supply. D for death related, funeral, burial, crematorium, mortuary, including transportation of deceased. Then spalled, then slow. So yes, that is sale before import. Sale before import means sale in high seas basis. So when the goods are in transit, we try to transfer the document of title to some other person and we get some money. So that is excluded from supply, where the other person who is purchasing the documents of title from us will be clearing the goods from the customs. Then liquor license granted by state government. State government will be giving license to people to sell the liquor, for which they get a license fee, that is excluded from supply. O for outside the country movement of goods, that is goods originating outside India and terminating outside India. Starting point and ending point both are outside India, but the financial impact, the payment is received in India, then also it is excluded from supply. Then warehoused goods sold. So imported goods which are kept in the warehouse, customs warehouse without payment of customs duty, and these goods I have transferred to some other person by way of transfer of documents to title, just like sale before import. So that is also excluded from supply. So these are the various activities given in section 7 subsection 2 read with schedule 3, which are excluded from supply. Then next one, you can see one note, that is generally employer and employee are treated as related person. So if employer is giving any gift to the employee, will it be treated as supply under 7(1)(c)? Because in case of related party transaction, even though without consideration, it will become supply. So when supplier, that is employer, is giving gift to the employee, as they are related, will it become supply? If the gift value does not exceed 50,000, it is not a supply. If the gift value exceeds 50,000, if the gift value does not exceed 50,000 in a year, then it is not a supply. If the gift value exceeds 50,000 in a year, then it will be treated as supply. Also, one more point we need to understand here is that what if it is, like a perk visits kind of, that is any benefit covered under salary offer document which form part of salary and is excluded from supply. So therefore, supply by employer to employee without consideration should be divided into two. Is it perk visit or is it gift? If it is a perk visit means what? So perk visits, in case of perk visits, there is no obligation, like it will be clearly specified. So therefore, this is as part of salary, so it is excluded from supply. Whereas gifts will not be specified in the employment contract. So gifts, we have to divide again into two. So gift per annum does not exceed 50,000, not a supply. Gift exceeds 50,000 per annum, so that will be treated as supply. Then there is one circular here, sale of land after development. That is, I am purchasing a land and in that land I am doing the development, like leveling and then putting the roads and then electrical lines, etc. And thereafter I transferred this land to some other person, like plots. Now also it is sale of land only. So sale of land as such or sale of land after development, both will be sale of land, which is excluded from supply. However, one person will be providing the services by way of leveling or laying down the lines or drainage lines, etc. So that activity will be covered under supply. Okay, that will be chargeable to GST. Then next, perk visits provided by employer to employee in terms of contractual agreement entered into between them will not be subject to GST. So that's what I have seen. Perk visits will never be subject to GST because it is forming part of salary and it comes under employee to employer in the course of employment. Then this is the summary of 7 subsection 1. In 7(1)(a), what is the nature of supply? Any activity. Consideration, yes, it must be there. Course or furtherance of business, yes. From whose point of view we need to see? From supplier point of view. Whereas 7(1)(aa), 71A is activity between a person and its members. And should it be for a consideration? Yes. And it should be in the course or furtherance of business? Yes. Again, from whose point of view? Supplier point of view. Whereas 71B is import of services. For consideration, yes, it should be for consideration, and it may or may not be in the course or furtherance of business. We need to interpret from whose perspective? Recipient point of view we need to interpret. Then 71C, read with schedule 1 DRIP. In all these cases, consideration is not required. And in the first and last case, it may or may not be in the course or furtherance of business. Okay, that is not specifically given. But in case of related party transaction and import of service from a related person, it should be in the course or furtherance of business. Then from whose point of view? Everything except import of services will be from the supplier point of view. But remember, principal agent transaction is only in the context of goods. Then that is what I have given, principal agent transaction only in the context of goods. Then we have some important definitions. Meaning of goods and meaning of services. Goods are defined under section 2 clause 52, service under 2 clause 102. Goods means any kind of movable property, but it does not include money and securities. But goods definition includes actionable claims like instruments. So like bill of exchange, promissory note, these actionable claims will be covered under goods. Even growing crops or things attached to a forming part of land agreed to be severed, cut under the contract of supply is also covered under goods. So this is the meaning of goods. Whereas services, section 2 clause 102, services means anything other than goods, and it also excludes money and securities. But when there is a transaction in money for a separate consideration, so like loans given for which extra consideration interest is collected, so that will become service. And then facilitating or arranging transaction securities. I am not doing transaction securities, but I am facilitating or arranging as an intermediary this transaction securities. So that is also covered under service. Then actionable claims means what? Actionable claim means right to receive a benefit or recover a debt. And that actionable claim is transferable and legally enforceable, and the holder of such right is entitled to receive benefit or recover debt. So that is called as an actionable claim. And money definition. So money can be Indian currency or foreign currency or any instrument recognized by RBI, but does not include old currency which is not in circulation. So sale of cryptocurrency, crypto coins. So this sale of cryptocurrency and sale of old coins. Sale of crypto is not recognized by RBI, so it is not money. And same way sale of old coins. Old coins is excluded from money. So therefore these will be treated as supply of goods and chargeable to GST. Then meaning of consideration. Consideration is defined under section 2 clause 31. Consideration includes, consideration excludes. Consideration includes what? Monetary payment, that is any amount received or receivable. So it can be monetary or non-monetary. And non-monetary can be in the form of goods or in the form of services. But consideration definition excludes subsidy from central government or state government or refundable security deposits. So whenever we collect some security deposit which is refundable in nature, that will not be treated as consideration. Also subsidy from central government or state government not treated as consideration. And any amount that is not received but receivable will also be treated as consideration. Consideration can be received from recipient or any other person. So what we need to see is presence of consideration. Not necessary that recipient only should pay the consideration. Then consideration should be in respect of, that is when we are supplying something, for that we need to collect, or in response to, that is we are not agreeing any amount, so but some amount is collected, that is in response to, or for the inducement of, that is the other person is inducing us to make a supply for which some amount is paid, that is that. So the consideration can be in respect of, in response to, for the inducement of supply of goods or services. Then donations. Donations are divided into two, conditional donations and unconditional donations. So conditional donation means we have an obligation to do something against the donation, and that will be treated as consideration and it will become supply under 71A. Suppose if it is an unconditional donation, that means we are receiving some money and we don't have obligation to do anything in return for that money received. So then it is not treated as consideration because it is not in respect of any supply of goods or service. So it is not a consideration. Consequently, it is not a supply. Now, what if the donor name is displayed anywhere in the premises, but the donor is not asking? It is like unconditional only. But what name is displayed? Display of name gives business advantage to the donor. Yes. Then it will be deemed as conditional donation and it will become supply. If display of name is not giving any business advantage to the donor, then it will not be treated as supply because that is treated like unconditional donation only. That is this business name is displayed or display of name does not result into business advantage. Then meaning of person. Person is defined under section 2 clause 84, and person under Income Tax Act, that is individual, HUF, firm, LLP, AOP, BOI, body corporate, etc. So that person under Income Tax Act plus central government or state government will be treated as person under GST, which means even central government and state government is treated as person under GST and they need to pay GST, but with respect to only specified activities, which we already discussed, that is Department of Post, airport or port service, transportation of goods or passengers, services to business entities. Then meaning of business. Business is defined under section 2 clause 17. We have the general meaning of business and the specific activities. So this general meaning of the business, when we discuss, so those activities are business and there are some specified activities. These specified activities, whether it comes into the general meaning of business or not, it will always be treated as business. So first we will see the general meaning. So this is about the general meaning, ABC. So ABC talks about the general meaning of business. In that, first point, trade, commerce, manufacture. So any trading sector or manufacturing sector or commerce, that is service sector, will come under business. Then profession, occasion, adventure. These three are related to skills. So profession, occasion, adventure. Wager, that is betting transactions or any other similar activity, whether or not for a pecuniary benefit. Pecuniary benefit means profit motive. Then this will be treated as business. Then any activity which is connection with or incidental or ancillary to subclause A. Any activity which is incidental or ancillary for this 7 activities, trade, commerce, manufacture, then profession, occasion, adventure or wager. So for these, any incidental or ancillary will also be coming under business. And this above activity, whether or not there is volume, frequency, regularity, will also be covered under business. Even if it is a one-time activity, that will be treated as business. Then there are some specific activities. These specific activities are always treated as business, whether it is covered under the general meaning or not. That is supply or acquisition of goods, including capital goods, in connection with commencement or closure of business. So whenever I am commencing business or closing business, at that time if there is any goods which are supplied, it may not be my business, but even then it should be considered as business. Then provision by a club, association or society to its members. So there is a club or association or society that is providing services to its members, facilities to its members, and they are collecting some amount. So that amount collected will also be treated as business. Then next, admission for a consideration, that is entry tickets. Entry tickets will be treated as business. Then services by a person holding an office, that is there is one person who is holding an office which is accepted by him in the course or furtherance of his trade, profession or occasion. For holding that office, he will get some money, that amount received. For example, CA becoming central council member, we discussed. So that amount received will be treated as business. Then activities of a race club. So race club conducts lot of activities. All those activities, including entry tickets or sale of food, etc., will be treated as business, including the betting transactions. They may give license to a person to conduct the betting transaction. That license fee also will be treated as business. Then any activity or transaction undertaken by central government, state government or local authority in which they are engaged as public authorities, that is all government activities, will be treated as business. Then related definition is not given under section 2, but it is given under section 15. So related means such persons or officers or directors in one another's business. Then such persons are legally recognized partners of a firm. So partners of a firm are treated as related. Then such persons are employer and employee. Then any person, that is there is a shareholder who is holding 25% or more in 2 companies, then those 2 companies will become related. Then one of them directly or indirectly controls the other. What is the meaning of control? Control means either majority common board of directors or investment greater than 50 or controlling the operations. Then both of them are directly or indirectly controlled by a third person. There are 2 entities. These 2 entities is having a common control. So then these 2 entities will be treated as related. Then together they directly or indirectly control a third person. That is, there are 2 shareholders of a company. Together these 2 shareholders has invested more than 50%. So then these 2 shareholders are treated as related. Then they are members of the same family. So family is defined as spouse and children, whether or not dependent, brothers, sisters, parents, grandparents. If they are wholly and mainly dependent on that person, then only they will be treated as family. Then they will become related. Then sole selling agent, sole agent or sole distributor, when all the supplies are made only through one agent or one distributor, so then that will also be treated as related. This is the 9 points. These are the 9 points that we have with respect to related definition. What is the consequence of related definition? So whenever there are transactions between related parties, even though without consideration, that will become supply, and import of service from related person will also become supply. Then meaning of various supplies. We have total 4 supplies: taxable supply, exempted supply, non-taxable supply, and zero rated supply. So what is zero rated supply? Already we have completed the discussion. That is, so export of goods or services, supply of goods or services to SEZ is known as zero rated supply. What are non-taxable supplies? Only 2. That is alcoholic liquor for human consumption and petroleum products. These 2 are considered as non-taxable supplies on which there is no need to pay GST. Then exempted supplies. If the goods are exempted, that is notified as exempted in the notification, or nil rated or includes non-taxable, that will be exempted supply. The balancing figure is taxable supply. And goods not liable to tax, that is alcoholic liquor for human consumption and petroleum products. What are the petroleum products? 5 petroleum products are not covered under GST. That is crude oil, petrol, diesel, aviation turbine fuel, and natural gas. Then the next area is meaning of aggregate turnover. Aggregate turnover is relevant for the purpose of deciding whether a person is required to get registered or not, or various provisions are connected to aggregate turnover. All these 4 supplies will come into the meaning of aggregate turnover. That is taxable supplies, exempted supplies, non-taxable supplies, and zero rated supplies. All these 4 supplies will come into the meaning of aggregate turnover, and this turnover, aggregate turnover, will be computed on an all India basis. It's not computed state wise, and this aggregate turnover excludes inward supplies covered under RCM, because inward supplies will never be treated as aggregate turnover. Turnover means outward supplies. So inward supplies will not come in aggregate turnover. Even GST, CGST, SGST, that entire GST group also will not be coming in aggregate turnover. Then GST on sale of flats or building. Suppose if entire consideration is received before obtaining completion certificate, then will it be covered under supply? Yes, it is covered under supply and GST payable, and it is treated as works contract service. If entire money is received after obtaining completion certificate, so then it is excluded from supply, GST not payable, and it is treated as sale of immovable property. If part money received before or part money and remaining amount received after, that is not excluded from supply, covered under supply, GST payable on entire amount, and it will be treated as works contract service. So here completion, CC refers to completion certificate or OC refers to occupation certificate, whichever is earlier should be taken. Then works contract. Works contract means a contract. What is a works contract service? A works contract means a contract that involves both goods and services, and these goods and services in relation to immovable property and for a lump sum consideration. Say I am constructing a building and I am supplying goods as well as services for construction of this building, which is an immovable property, and I collect some lump sum consideration. So that will be treated as works contract service, and works contract is always treated as supply of services. Then job work. Job work means carrying out process on the goods belonging to the other person. So I got some goods, and on that goods I do some process, then it will be called as a job work. Then distinct persons, because we have related party transaction including transaction between distinct persons. So who are distinct persons? One registration of a person to their another registration is known as distinct person. So whenever we are doing business in multiple states, we need to get registered in each and every state. So one state registration and the other state registration of the same person will be treated as distinct person. Whenever we are doing business within the state, when we have multiple places of business, it is optional for us whether to go for separate registration or single registration. If we go for separate registration, then one registration to another registration is known as distinct person. Okay, that is with respect to this. Place of business in more than one state should get registered in each state from where taxable supplies are made. Place of business in more than one place within the state, either single registration or separate registration with respect to each place of business. Then GST on actionable claims. So actionable claims are treated as goods, but there are some actionable claims which are covered under money definition like bill of exchange, promissory note, etc. So suppose if the actionable claim is covered under money definition, bill of exchange, promissory note or bearer check, it will neither be treated as goods nor will be treated as services because it is excluded from supply. Whereas other actionable claims will be treated as goods. Suppose if it is lottery, betting, gambling, then it is supply, and others it is not a supply. Then after knowing what are all included in the meaning of supply, excluded from the meaning of supply, now the classification of supply will arise. Suppose if it is a movable property, and if there is a transfer of title in relation to movable property, the transfer of title can be at a present or at a future date, then it will be treated as supply of goods. There is no transfer of title, but there is a transfer of right to use that movable property. Then whatever consideration that we receive will be coming under supply of services. Then immovable property will never be coming under supply of goods, but it will come under supply of service. Yes, bringing into existence a immovable property like construction, or transfer of right to use immovable property like renting of immovable property, that will become supply of service. Then IPR, intellectual property rights. If there is a permanent transfer of IPR, it will be coming under supply of goods. If there is a temporary transfer of IPR, that will be treated as supply of services. Then suppose if there is a contract wherein both goods and services are supplied, and if these are notified activities, 3 notified activities that involves both goods and service, but it will always be treated as supply of service. What are they? Works contract, information technology, software, and supply of food. These 3, even though it involves both goods and service, it will always be treated as supply of service. Then other supplies will be classified based on composite supply and mixed supply. Suppose if they are composite supply, and if the principal supply is goods, entire transaction treated as goods. If the principal supply is service, entire transaction treated as supply of service. Same way, if it is a mixed supply, if the highest rate is goods, entirely it will be treated as goods. If the highest rate is services, entirely it will be treated as services. Apart from that, any other activity will come under supply of service under the category of doing an act, not doing an act, or tolerating an act. Then composite supply and mixed supply, that is given in section 8. So what is a composite supply and mixed supply? Composite supply means 2 or more supplies naturally bundled in the ordinary course of business, and 3 conditions should be satisfied in composite supply. So number 1, all the given supplies are taxable supplies and they are naturally bundled in the ordinary course of business, and the principal supply is identifiable. If these 3 conditions are satisfied, it will be coming under composite supply, but the price can be single price or separate price, that is irrelevant. Whereas if any one condition is not satisfied, suppose all the supplies are not taxable, we have a combination of taxable, exempted, or no, not naturally bundled, or the principal supply not identifiable. In these cases, then it may become mixed supply if the price is single. But in case of mixed supply, the condition that the price should be single price. So this is the meaning. Types of supplies in case of composite supply is always taxable. Here combination of taxable, exempted, and non-taxable. And how the price should be. In case of composite supply, the price can be single price or separate price, but in case of mixed supply, always there should be single price. And principal supply, in case of composite supply, principal supply is must, but in case of mixed supply, principal supply is not relevant. And what will be the rate of GST? If it is a composite supply, we take the rate of principal supply and apply it on the entire transaction, whereas in case of mixed supply, we take the highest rate and apply it on the entire transaction. And examples of composite supply: AC plus installation, because it is naturally bundled, one cannot be supplied without the other. Transportation plus insurance, if there is no transportation, there is no insurance. Replacement of parts during servicing plus labor charges for replacement, if there is no replacement of parts, labor charges will not arise. So these 3 are naturally bundled, so it will come under composite supply. Whereas inverter plus battery can be supplied separately also. Then renting of building plus renting of furniture can be given separately also. Popcorn plus coke in a theater can be given separately also. So these 3 are not naturally bundled in the ordinary course of business. Why not naturally bundled in the ordinary course of business? Because one can be supplied even without the other, so it is not naturally bundled. Now what if there are 2 or more supplies which is neither composite supply, because maybe taxable and exempted, or maybe there is no principal supply, or not naturally bundled, and even it is not a mixed supply. Why? Because price is separate. So then it will be treated as 2 individual supplies and taxable accordingly. Then next we have liability to pay GST, section 9. So this liability to pay GST, so section 9 subsection 1 talks about alcoholic liquor for human consumption. Except alcoholic liquor for human consumption, all other goods are covered under GST. Then 9 subsection 2 says that, so petroleum products temporarily excluded from the ambit of GST, and as and when GST council decides, it will come into the ambit of GST. Now right now, as per 9(1) and 9(2) general rule, who is liable to pay GST to the government? On every transaction which is taxable, the liability to pay GST to government is on the supplier, that is FCM, forward charge mechanism. Whereas in these cases 9(3), 9(4) and 9(5), supplier will not pay GST to government, but some other person will pay GST to government. Who is that some other person? In case of 9(3), the liability to pay GST to government is on recipient. Even in case of 9(4), the liability to pay GST to government is on recipient. Whereas in 9(5), the liability to pay GST to government is on e-commerce operator. Now when it will be 9(3), 9(4) and 9(5), there are some notified services which are given for the purpose of 9(3). With respect to those notified services, liability to pay GST is on recipient, and those services are notified. You can remember that with a keyword, Sir CG got salads. So these are the list of services. So on the services, liability to pay GST is on recipient, and the supplier may be registered or unregistered, that is relevant. Whereas in case of 9(4), whenever we are making inward supply from an unregistered person, there is a registered person who is purchasing from an unregistered person. So then 9(4) will be applicable. Right now only one transaction is notified, that is inward supplies of a promoter or builder from an unregistered person, and who will pay GST? That recipient will pay GST and the supplier should be unregistered. Whereas 9(5), whenever there are some services supplied through e-commerce operator, liability to pay GST is on e-commerce operator. What are those services? Total 4 services, HATE. H for housekeeping service, A for accommodation service, T for transportation of passengers by any motor vehicle, E for eating food from the restaurant. For these four services, liability to pay GST to government is on e-commerce operator. And with respect to the first two, that is H and A, housekeeping service and accommodation services, supplier should be unregistered, then only it will come under 9 subsection 5. Whereas with respect to the next two, that is transportation of passengers by any motor vehicle or eating food from the restaurant, the supplier may or may not be registered. Always it will come under 9(5) notified services. Then what are the notified services for 9(3)? That is Sir CG got salads, where liability to pay GST is on the recipient. S for security lending, and I for import of services, R for renting of motor vehicle. But in case of renting of motor vehicle, 3 conditions should be satisfied for RCM. Supplier should be other than body corporate, recipient should be body corporate, and the rate of GST should be 5%. Then another R is renting of immobile property, which is a residential property, to a registered person for residential purpose. Then that registered person will pay GST under RCM. Then we have C for copyright services. So total 4 copyrights: original literary, dramatic, musical and artistic works, and it will be recipient will be paying GST. But in case of original literary, the supplier is having option to pay GST under FCM. If they opt for that option for the next 1 year, they should only pay GST under FCM. Then next we have GTA, that is goods transport agency services. Goods transport agency services, where recipient is consignor or consignee, he will pay GST. However, here there are 2 options. GTA can again opt to pay GST under FCM or RCM, but they have to decide that option before commencement of the financial year, and for that financial year that option will remain valid. And whenever they are paying GST under FCM, again they have 2 options. Either they can pay GST at the rate of 12% with ITC, they can take input tax credit on their inward supply, or 5% without ITC, they cannot take ITC on their inward supply. That is an amendment. Then G for government. So, Sir CG over GOT. G for government services to business entity, liability to pay GST is on the business entity. O for overseeing committee services to RBI. So, when overseeing committee is providing services to RBI, liability to pay GST is on RBI. Then T for transfer of right to use land. So, transfer of right to use land, that is TDR, FSA and long-term lease. In case of TDR, transferable development rights, so TDR, FSA, floor space index, and long-term lease of land. So then liability to pay GST is on the builder or promoter under RCM. Then sponsorship service. Sponsorship service, supplier is organizer of the event, recipient is the one who pay the sponsorship money. So it will come under RCM if the recipient is body corporate or firm. If the recipient is not body corporate or firm, it will not come under RCM, where liability to pay GST is on supplier FCM. So whatever we are discussing here is RCM. If RCM is not applicable, the balancing figure FCM, supplier will pay GST. Then agent services, total 5 agents are covered. Insurance agent to insurance company. Insurance agent providing service to insurance company gets some commission on that. Insurance company will pay GST under RCM. Then recovery agent to bank, financial institution or NBFC. So bank, financial institution, NBFC will pay GST on the commission. Then direct selling agent other than body corporate or firm to bank, financial institution, NBFC, on the commission bank, financial institution, NBFC will pay. What if the direct selling agent is body corporate or firm? Then it is not covered under RCM, it is covered under FCM. Then business facilitator to banking company, not business correspondent, only business facilitator to banking company, but agent of business correspondent to business correspondent. So these are the 5 agents covered under RCM. Sir CG got salads in that SAL. L and A, legal services and advocate services, that is services provided by individual advocate or firm of advocate. A for arbitrator service. These 2 services provided to a business entity, wherever it is taxable, liability to pay GST is on the business entity. Then D for director services to company or body corporate. So, but the director should not be an employee of the company. Then yes, that is security agency services. In case of the security agency services, supplier should be body corporate and recipient any person. Then it will come under FCM. So supplier should be other than body corporate and recipient should be registered, but recipient is registered but not opting for composition scheme or not registered only to deduct TDS, then it will be covered under RCM. Here S refers to security agency services. Security agency services. security agency services. Then this is the list of services which is covered under RCM, where liability to pay GST is on the recipient. Then we have 9 subsection 4. 9 subsection 4 talks about inward supply of a promoter or builder from an unregistered person. Now these inward supplies are divided into two: inputs and input services, capital goods. Capital goods always should be purchased from a registered person. If it is purchased from unregistered person, we need to pay GST under RCM at the rate applicable to capital goods. Whereas inputs or input services, we have to exclude few things, that is electricity, TDR, FSI, long term lease, because it is already covered under 9(3). Then petrol, diesel and natural gas, these will be excluded. So remaining inward and inward supplies, inputs and input services should be always purchased from a registered person. Only one: cement. So cement should always be purchased from a registered person. If cement is purchased from unregistered person, we need to pay GST at the rate of 28%. So step number 1, capital goods. Capital goods purchased from RP, leave it. Purchased from URP, pay GST at the rate applicable to capital goods under RCM 9 subsection 4. Second point, cement. Cement purchased from RP or URP. Purchased from RP, leave it. Suppose if it is purchased from URP, pay GST at the rate of 28% under RCM section 9 subsection 4. Next, number 3, all other inputs and input services divided, purchased from unregistered person, divided by total inputs and input service including cement. Now see the percentage. The percentage is 20% or more. Suppose if it is 20% or more, then on the differential amount, GST payable under RCM, because the condition is that 80% should be purchased from a registered person. Means how much is allowed to be purchased from unregistered person? 20%. Suppose if it is 20% or less, the remaining inputs and input service from unregistered person divided by total inputs and input services. If it is less than 20% or equal to 20%, leave it. If it is greater than 20%, see how much it is greater. Suppose if it is 23%, 3% excess. On the 3%, we need to pay GST under RCM at the rate 18%. So that is with respect to this 9 subsection 4. Then 9 subsection 5, total 4 services: HATE, housekeeping service, accommodation service, transportation of passengers by any motor vehicle, eating food from a restaurant. These are notified service. Liability to pay GST with respect to these supplies is on e-commerce operator. So government to whom, who should pay GST to government? That e-commerce operator should pay. But in that, for H&A, supplier should be unregistered. Then only it is notified for 9(5). What if supplier is registered? It is not notified for 9(5). Supplier only will pay GST. Same way, this transportation service and eating food from the restaurant. What if the supplier is registered and unregistered? Always e-commerce operator only will pay GST. Then next one, what we have is some important points in relation to this. Only in case of notified services, e-commerce operator is liable to pay GST. Suppose if any other service is provided to e-commerce operator or any other supply is made through e-commerce operator, for that supplier only will pay GST. And every e-commerce operator is compulsorily required to get registered irrespective of their threshold limit. Then every supplier of goods, not supplier of services, every supplier of goods through e-commerce operator is also compulsorily required to get registered. But supplier of services, supplier of notified service and supplier of other than notified services are required to get registered only when their aggregate turnover exceeds threshold limit. Suppose if they are supplying only through e-commerce operator, then anyhow e-commerce operator will pay GST. So supplier of notified services, supplier of notified service and supplier of other than notified services, they need to register only when aggregate turnover exceeds threshold limit. Then there is an exception to 9 subsection 3, that is in case of transportation of goods by vessel, where both supplier and recipient are located outside India. Supplier is transportation service provider, recipient is exporter of goods. Both are outside India. Transportation of goods by vessel from where to where, outside India to India, that service is always taxable, and liability to pay GST is on importer of goods. That importer of goods is neither supplier of service nor recipient of service. That importer of goods who is in corner is required to pay GST under RCM. This is exception to 9(3), because in case of 9(3), liability to pay GST is on recipient, but in case of 9(3), exception to 9(3), it is neither supplier nor recipient, but some other person is paying, that is importer of such goods. That's why this is an exception to section 9 subsection 3. So with this, we have completed section 9. Then we have composition scheme. That composition scheme is also part and parcel of this charge under GST. So you can see that composition scheme, so that is in page number Yes. Page number 101. Composition scheme, that is section 10. Section 7 supply, section 8 composite supply, mixed supply, section 9 liability to pay GST, and section 10 is composition scheme. Section 10 composition scheme, we have two composition scheme, that is section 10 subsection 1 and 10 subsection 2. 2A. So 10 subsection 1 composition scheme is applicable to manufacturer, trader and supplier of food service provider, whereas 10.2a is applicable to manufacturer, trader or any service provider. When 10.1 will be applicable if their aggregate turnover during the previous year does not exceed 150 lakhs, but for those 8 states it will be 75 lakhs. What are those 8 states? MMTN, USAM, Manipur, Mizoram, Tripura, Nagaland, Uttarakhand, SAM, that is Sikkim, Arunachal Pradesh and Meghalaya. For those 8 states it will be 75 lakhs. Whereas under 10.2a, if aggregate turnover does not exceed 50 lakhs, then they can go for composition scheme under 10.2a. And what is the rates in case of 10.1? In case of 10.1, if you are a manufacturer, the rate will be 0.5% CGST, 0.5% SGST on total turnover. Whereas if you are a trader, 0.5% CGST, 0.5% SGST on taxable turnover. Whereas if you are a supplier of food service provider, 2.5% CGST, 2.5% SGST on total turnover. Suppose if you are under 10.2a, then 10.2a always it will be the same rate, that is 3% CGST, 3% SGST on total turnover. So that's the reason why for a manufacturer and trader and even supplier food service provider, it is advisable to go for 10.1 only because the rates are less and even the limit is also high. Whereas then 10.2a is applicable to whom? So a person who is a service provider other than supplier of food, so they can go for 10.2a. Then what is the current year limit? That is, if previous year aggregate turnover does not exceed that 150 lakhs or 75 lakhs, then they can opt for composition scheme during the current year. And during the current year also, they should ensure that they are not crossing that limit of 150 lakhs or 75 lakhs or even 50 lakhs. If they are crossing that limit, then they are disqualified from the composition scheme. And difference in the conditions, that is, there are some cases where composition scheme is not applicable. You can remember that as S9 RCM. These are the cases where composition scheme is not applicable. Yes, for service provider other than supplier of food or beyond a 10% limit. That is, a person who is under 10.1 can supply any other services other than supply of food. To what extent? Up to 10% of turnover during the previous year or 5 lakhs, whichever is higher, up to that limit they can provide the services. Suppose if they cross beyond that limit, then they are disqualified from the composition scheme 10.1. Then N for non-resident taxable person who come from outside India to India and is not having any physical place of business in India is called as a NRTP. They cannot go for composition scheme. Then a person who is making interstate supply of goods or service also cannot opt for composition scheme. And a person who is making non-taxable supplies, that is alcoholic liquor and petroleum products, cannot opt for composition scheme. Then a supplier of goods or services through e-commerce operator also cannot opt for composition scheme. Then S9, R for RCM 9 subsection 4, that is inward supply from an unregistered person on which GST is not yet paid. So that person also cannot opt for composition scheme. C for casual taxable person, a person who come from other state to this state to make supplies in this state and is not having any physical place of business in this state is a casual taxable person. They also cannot go for composition scheme. Then M, manufacturer of notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. These are the notified goods. Manufacturer, only manufacturer of these notified goods cannot opt for composition scheme. If they are a trader, they can opt for composition scheme. These are the conditions where, like, these are the consequences or these are the situations where they cannot opt for composition scheme. 10.1. 10.2a also, all these points are applicable except yes, because any service provider can opt for composition scheme. So the difference in conditions, so in case of 10.1 it is S9 RCM, whereas here it is 9 RCM. What is the disadvantage of composition scheme? The disadvantage of composition scheme is that they cannot avail ITC on their inward supply. This disadvantage is common for both 10.1 and 10.2a. That is, whenever I am opting for composition scheme, I cannot take ITC on my inward supply. And second disadvantage is that I cannot collect the GST from my recipient. Then, what is the meaning of aggregate turnover for determining the eligibility to opt for composition scheme? So, regular aggregate turnover definition only, that is taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies. It excludes inward supplies covered under RCM and it excludes taxes. This is regular aggregate turnover definition. Extra one point you need to remember, that is interest on loans, advances, deposits also will not be taken into aggregate turnover definition. Then, person opting for composition scheme can provide service up to 10% of the turnover. So, or 5 lakhs, whichever is higher. That is, for example, if my previous year turnover is 120 lakhs, if previous year my aggregate turnover is 120 lakhs, then during the current year, I can provide services up to how much? 120 lakhs into 10%, that is 12 lakhs or 5 lakhs, whichever is higher. So I can provide services. Which services? Services other than supply of food up to 12 lakhs I can provide, and still I can be in composition scheme, that is this. And while computing the above exempted supply by way of interest or loans or advances, that is here also, while computing this 12 lakhs, so we don't have to take interest income. So interest on loans, advances, deposits, even if we have, that will not be affecting this 12 lakhs. Suppose if other services is 10 lakhs and interest on loans, advance, deposits is 4 lakhs. So total exceeds 14, means we cross 12. No. So don't take that interest on loans, advances, deposits. That's what they are conveying. Then what is the tax rate applicable for these services, these 10% services? The tax rate applicable to a trader, that is 0.5% CGST, 0.5% SGST on taxable turnover. Then other procedural provisions, suppose if you are already registered, how to go into composition scheme? We need to apply in form GST CMP2 before commencement of the financial year. Suppose if not already registered, now only we are getting registered, we can directly make application for registration. In that application for registration, we can select composition scheme. And every person who is opting for composition scheme should display composition taxable person in every notice, signboard displayed at the principal place of business and additional place of business. Then they need to file a quarterly return in CMP8, form GST CMP8 by 18th of the month following every quarter. Also, the composition scheme person will pay tax on a quarterly basis, that is 18th of the month following every quarter. And a person opting for composition scheme is required to file an annual return in GSTR4 by 30th April of the succeeding financial year. And validity of the composition scheme, if all the conditions are satisfied, option remains valid and we don't have to make any intimation. Suppose if conditions are not satisfied, we need to exit from the composition scheme and we have a grace days of 7 days. And to exit from the composition scheme, we need to file CMP4. So CMP2 is for entry into composition scheme and CMP4 is for exit from the composition scheme. And withdraw, anytime you can self withdraw from the composition scheme by filing CMP4. And suppose if you have breached the conditions and you did not come out of the composition scheme, and if department comes to know, they will give a notice in CMP5 and you have to give a reply to that notice within 15 days, and thereafter within 30 days from the date when they receive the reply to that notice, they will pass an order either allowing you to continue in the composition scheme or denying the composition scheme. Then next, this is the overview of various forms involved. And whenever they deny the composition scheme, will it be prospective or retrospective? It can be prospective or it can be retrospective, but it should not be before the date when we breach the conditions. Then this is the meaning of various turnovers as to how to compute the turnover for the purpose of determining the eligibility, and second one for computing the 10% limit, and for the purpose of turnover for payment of GST under composition scheme. Value of supply is given under section 15. Only one section we have, that is section 15, and as per section 15 we need to take value of supply as the transaction value. What is the meaning of transaction value? Transaction value means price involved in the transaction, that is price actually paid or payable for the supply of goods or services. And value of supply will be equal to transaction value if two conditions are satisfied. What are those two conditions? Price must be the sole consideration. Apart from price, there should not be any other consideration, and supplier and recipient are not related. If these two conditions are satisfied, then only we will take value of supply as the transaction value. What if any one condition is not satisfied? If any one condition is not satisfied, then the value will be determined as per rules, and that rules is not there for our exam, so we don't have to bother about that. Then, so what is the meaning of related? So related is not defined here, but related is defined in section 15, explanation to section 15. So that is already we have in taxable event. So when parties are treated as related, so total 9 situations are there. So number 1, they are officers or directors of one another's business. They are legally recognized partners of a firm. They are employer and employee, and one shareholder holding 25% or more in 2 companies makes those 2 companies related, and then together they control a company, and then they are under the common control of a third person, and one person directly or indirectly controls the other, and they are members of the same family. And thereafter we have sole selling agent. These are the 9 relationships. So whenever the transaction is between related parties, remember transaction value will not apply. But In exam, we don't have to worry about that, as that rules, application of rules is not there. So we don't have to worry, which means by default, these two conditions are satisfied. Then next, to this transaction value, we have to make some inclusions as per 15 subsection 2. So 15 subsection 1 is talking about value equals to transaction value, whereas 15 subsection 2 is about inclusions in transaction value. So supplier who is making supply of goods or services to the recipient will make some payment. That payment will be taken as the transaction value. To this transaction value, as per 15 subsection 2, we have to make 5 inclusions. So that is TRSIS, TRSIS. So T for taxes, duties and cess by whatever name called other than GST. So while computing GST, all taxes we need to add, and finally GST will be computed. So any tax other than GST should be included in the value. R refers to recipient incurring the expenditure on behalf of the supplier. So recipient is incurring some expenditure on behalf of supplier, that should be included in the value. For example, as per the contract, so supplier has to make some payment to some raw material supplier. So his raw material supplier, whose raw material supplier? The supplier's raw material supplier, but that payment is being made by the recipient. So actually it is the liability of the supplier which is incurred by the recipient. So it is an indirect consideration to the supplier, therefore it should be included in the value, that is this point. Then yes, what if recipient is incurring expenditure on his own account? That will not be included. For example, we need to deliver the goods at our factory gate and the recipient has to take care of the transportation. Now when recipient incurs the transportation, that will definitely be not included because it is expenditure incurred by the recipient on his own account, so that will not be included in the value. Then I refers to interest, late fee or penalty, and before that yes is supplier incurring the expenses. So supplier incurring the expenses and recovered from the recipient when? So before delivery or before supply of service, that should be included in the value. That is supplier incurring expenses like advertisement expenses, packing expenses, transportation expenses, etc., which the supplier incurs and charges it to the recipient. What is the point at which it is charged? So before or at the time of delivery of goods or before supply of services, then it should be included in the value. Then I for interest, late fee or penalty for delay in receipt of consideration. So suppose if the consideration is not paid on time, some extra amount will be collected for the delay in receipt of consideration, that should be included in the value. And then last, yes, that is subsidies. Subsidies which are directly linked to the price other than subsidy from central government or state government. So you can see the subsidy related point next. Subsidy is received by the supplier, and this subsidy is divided into two: directly linked to the price, not directly linked to the price. Directly linked to the price means the subsidy is with respect to the outward supply. So that is for every product sold or every service rendered, if they receive a subsidy, that is known as directly linked to the price. And this directly linked to the price again divided into two. Suppose if the subsidy is from central government or state government or from others. If the subsidy is from central government or state government, then that should be excluded from the value, because subsidy from central government, state government not treated as consideration. Suppose if the subsidy is from any other person, then it should be included in the value. What if that subsidy is not directly linked to the price? Means irrespective of the outward supply, so we will receive some lump sum amount as subsidy, then that will be ignored for the purpose of valuation, and that should be treated as donations. Suppose if it is a conditional donation, means that money we are receiving against doing something, then it is conditional donation, that will be treated as a separate transaction. Suppose if that money received for which we don't have any obligation to do, then it is unconditional donation, not treated as consideration, so we will leave it. Okay. Now in exam, so whenever they are giving the subsidy points, so we have two views to be taken. So that is either view 1 or view 2. What is that view 1 or view 2? That is, we should consider that the price is after considering subsidy or price without considering subsidy. So for example, if you see view 1 says that you need to take the subsidy reduced for arriving at the given price. Suppose if the given price, so price after considering subsidy, price after considering subsidy, price after considering subsidy. What is the meaning of price after considering subsidy? So there is some price, from that they reduced the subsidy and then we got the given price. That is the meaning of this statement, price after considering subsidy. Now, for that given price, already subsidy has been reduced, so accordingly we need to take. Suppose if the given price is say 10,000 rupees and subsidy from state government, so it is to be included or to be excluded. Subsidy from state government is to be excluded, and while arriving at this 10,000, it is already excluded, so you ignore. And subsidy from others, subsidy from NGO. So subsidy from NGO is from others to be included in the value. To arrive at this 10,000, already it has been reduced, so we need to add. Say for example, subsidy from NGO 2,000. Then this 12,000 will be taken as a value. This is view 1. Whereas view 2 is there. What is that view 2? In view 2, what we need to do? Price without considering subsidy. Price without considering subsidy. Price without considering subsidy means, so while arriving at the given price, so they have not reduced the subsidy. So given price x minus subsidy, okay, x minus subsidy, this x itself is the given price. This x itself is the given price, which means they have not reduced the subsidy. So now, say for example, if the given price is 10,000 rupees, given price is 10,000 rupees. Now what we need to do with respect to that? Subsidy from state government. Subsidy from state government to be included or to be excluded? To be excluded. And while arriving at this 10,000, it is not excluded. So we need to deduct, say for example, 1,000. And subsidy from others. Subsidy from others is to be included. And in this given price 10,000, it is already included. So we will ignore. So therefore, the answer will be 9,000. Whether we need to take view 1 or view 2 in the absence of information in the question. So clearly you need to look into the question. Suppose if the question says price after considering subsidy, you need to take that there is some x as the price, from that they reduced the subsidy given in the question and the remaining amount is the given price. Suppose if the price is without considering the subsidy, then whatever is the price that is given, they have not reduced the subsidy. Suppose if the question is silent, we need to follow view 1, that is price after reducing the subsidy. So if the question is silent, consider the given price is after reducing the subsidy amount given in the question. Okay. So these are the 5 inclusions with respect to value. So T, taxes, duties and cess by whatever name called other than GST. R, recipient incurring expenditure on behalf of supplier. Yes, supplier incurring expenditure and charge it to recipient. And then I, interest, late fee, penalty for delay in receipt of consideration. Yes, subsidy from other than central government or state government directly linked to price. Then we have 15 subsection 3, exclusions. Exclusions from the value of supply. So exclusions from the value of supply is only one point, that is discount. So discount is divided into 3. Discount given before or at the time of supply, discount given after supply. So this discount given before or at the time of supply will be always allowed as deduction. Example, trade discount. So therefore before supply itself, we will give the discount. So at the time of preparing the invoice, we know what is the discount. So we will prepare the invoice like price minus trade discount or some other discount. So therefore it is duly allowed as deduction and GST will be computed on the discounted price. Whereas if the discount is given after supply, which means already invoice has been prepared. Now we need to check whether it is agreed before or at the time of supply or not. Is it agreed before or at the time of supply? So suppose if it is agreed before the time of supply, example cash discount. So is it allowed as reduction? Yes, it is allowed as reduction. For that we need to give a credit note. That is already invoice has been prepared. Suppose if the invoice is prepared for 10,000 plus GST. Invoice is prepared for 10,000 plus GST. Now we are offering a discount of 5%. So when we are giving a cash discount of 5%, that is say 500 plus GST. Now for this 500 plus GST, we can give a credit note. Because of giving credit note, what happens? The liability of the supplier will come down, but the recipient has to reverse the ITC. Because the recipient would have taken ITC on the basis of this invoice. So but we are reducing that. So therefore he need to reverse the ITC. So discount given after supply, but terms are agreed before or at the time of supply, allowed as deduction, provided a credit note is issued. Recipient should reverse the proportionate ITC. Suppose if the discount is given after supply and the terms are not agreed before the time of supply, like end of season sale discount, that discount is not allowed as deduction, which means that suppose in this case here instead of cash discount, this is some end of season sale discount, end of season sale discount. In this case, so credit note can be issued? No, credit note cannot be issued. Then GST will be payable on entire 10,000. So even though we are receiving 9,500 plus GST, but the GST should be computed on entire 10,000. So reason being, this discount is not allowed as a deduction. So GST payable on the value before discount. So this is the exclusion. So this is what we have in value of supply section 15 subsection 1, 2 and 3. Then whether GST applicable on addition or penal interest on the overdue loan. So the loans are basically divided into two, that is hire purchase transaction and hire purchase financing. Hire purchase transaction means there are only two parties. The one who is giving the hire purchase finance, so that is the seller himself will give the financing. So here there are two parties, hire vendor and the hire purchaser. Now whatever interest that is collected from the hire purchaser by the hire vendor in installments, in every installment there will be interest component. That interest will be treated as interest on account of delay in receipt of consideration, and that interest will be taxable. As that interest will be taxable, for non-payment of any EMI, if some penal interest is levied, that penal interest is also taxable. Whereas in case when the transaction is hire purchase financing, which means there are three parties, seller, buyer and a financier. Now the seller will get money from the financier and the financier will recover the money from the buyer in the form of installments. In these installments there will be interest. That interest will be exempted because we have interest on loans, advances, deposits as exempted. So in that case, so the financier recovering the EMIs, in that there is interest component, that interest component will be exempted. As that interest component is exempted, for non-payment of that EMI or delay in payment of EMI, one extra penal interest is levied, that penal interest is also exempted. That is with respect to this. Then, so if the main interest is taxable, penal interest is also taxable. If the main interest is exempted, penal interest is also exempted. Then what is the relevant date for determination of exchange rate? So whenever the invoices is denominated in foreign currency, we need to convert that into Indian rupees. So for the purpose of payment of GST, the value should be converted into Indian rupees. Which rate we need to take? If it is goods, we need to take CBIC rate, and if it is services, we need to take generally accepted accounting principles rate, which is nothing but the average of the buying rate and selling rate. Average of buying rate and selling rate should be taken. Average of buying rate and selling rate should be taken. Okay. Suppose if it is goods, we need to take CBIC notified rate. Suppose if it is services, we need to take GAAP rate, average of the buying rate and selling rate. And which date we need to take? So on the time of supply. So first we need to determine the time of supply for the transaction, and on the date of time of supply, whatever is the exchange rate that should be taken in case of goods, that is CBIC notified rate. Whereas in case of service, first we need to determine the time of supply, and on the date whatever is the GAAP rate that should be taken. And by taking this rate, if you compute the GST, and thereafter if the actual exchange rate is different, should we again pay any tax on that? No, not required. So that is this note, exchange gain or loss shall be ignored for the purpose of GST. Then next point, TCS. TCS under Income Tax Act will not be included. For example, there is a seller and there is a buyer. So therefore seller is making sale of car. So when seller is making sale of car, from the buyer, seller will be collecting price, then TCS under Income Tax Act, and then GST. So this TCS will be collected by seller from the buyer, and that TCS will be deposited with the income tax department, and the buyer can take this TCS as credit and adjust against his income tax liability. So whether this TCS should be included in the price while computing the GST. This TCS is not a tax on income. This TCS is a tax on expenditure. It is an interim levy not having the character of a tax. So due to that reason, while computing the GST, this TCS should not be included in the price as per this circular. TCS not to be included in the value. What about TDS? TDS is definitely tax on income. So whenever there is a service provider, and this service provider is getting some money from a service recipient. Okay. So there is a service provider who is getting some money from the service recipient, say for example, the service recipient has given 90,000 rupees and the service recipient has deducted a TDS of 10,000 rupees. So what does it mean? What should be taken as value of supply for the service provider? The value will be 90,000 received plus TDS deducted. So 90,000 plus 10,000 will be taken as 1 lakh. The logic is simple. This 10,000 is nothing but the tax which the service provider has to pay. So therefore that is deducted by the recipient, which is a tax on income. So income tax. So it is having a character of tax. So while computing the value, we need to take the TDS. So TDS under income tax should be included in the value. TCS under income tax should not be included into the value. Then next, credit note and debit notes. So the provisions related to debit notes and credit notes are given in section 34. So when a debit note will be given and when a credit note will be given, whenever there is an increase in the invoice value, already one invoice is given. Now we need to increase that invoice value. Why we need to increase the invoice value? Maybe for interest, late fee penalty or any other amount we are extra collecting. So for that we will give a debit note, or whenever we need to increase the tax in the invoice, so then also we'll give, say we charge 12% but the actual tax is 18%. For collecting that 6% also we will be giving a debit note. So whenever there is an increase in invoice value or increase in the tax than invoice, so then debit note will be given. Whenever there is a decrease in the invoice value or decrease in the tax as per invoice, so then in that case a credit note will be given. So basically whenever there is interest, late fee penalty, debit note will be given, and whenever there is a discount that is offered to the customer, post supply discount, for that credit note will be given. So who will be giving this debit note and credit note to whom? As per section 34, debit note and credit note will be given by supplier to recipient only, but recipient will not give any debit note or credit note to the supplier. Is there any time limit for debit note? There is no time limit. So means it can be given even after 3 years, 4 years, 5 years also, because that leads to increase in liability. So therefore there is no issue. But in case of credit note, there is a reduction in liability. So they have given a time limit for issuance of credit note. By when credit note should be given? By 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. For example, if financial year is 2021-22, for this financial year 2021-22, so if there is any invoice, the credit note should be given by 30th November of the succeeding financial year. 30th November of the succeeding financial year means 30/11/2022, or B, date of filing annual return. So date of filing annual return, suppose if it is 25/12/2022, then whichever is earlier. So by 30/11/2022, the credit note needs to be issued. 30th November of the next financial year or date of filing annual return, whichever is earlier. So total in 5 cases, this date will be common. What are those 5 cases? First, the time limit for issuance of credit note. Time limit for credit note. Time limit for credit note. Time limit for credit note. Then next, time limit for availment of ITC. Time limit for availment of ITC. Availment of ITC. And third one, that is time limit for rectification of GSTR1. Time limit for rectification of GSTR1, and then time limit for rectification of GSTR3B. Time limit for rectification of GSTR3B, and thereafter time limit for rectification of GSTR8. So e-commerce operator is required to file one return, that is GSTR8. So time limit for rectification of GSTR8. So in these 5 cases, the time limits is common. What is that? 30th November of the succeeding financial year or date of filing annual return, whichever is earlier will be taken. Then what is the consequence of debit note to the supplier? Because of giving debit note, the supplier's liability will increase and recipient ITC also will increase. And what supplier has to do is that supplier should report that liability in GSTR1 and GSTR3B. Recipient should take the ITC in GSTR3B. What will be the consequence of giving credit note by the supplier to the recipient. Because of credit note, there will be decrease in liability for the supplier, and that will be reported in GSTR 1 and 3B by the supplier. So liability will come down. So that particular month in which credit note is reported, the liability in that month will be reduced. And what is the consequence to the recipient? As the liability to supplier got reduced, so for the recipient, so he need to reverse the ITC. Suppose if there is no balance in ITC, then the liability will increase. Whose liability? Recipient's liability will increase, and recipient has to make this adjustment in GSTR 3B. Then next we have invoice and time of supply. So we completed value of supply. The next area is invoice and time of supply. And in this invoice and time of supply, actually time of supply alone cannot be separately learnt without knowing the due date of invoice, because due date of invoice and time of supply are connected. So that's the reason why we need to first learn due date of invoice. So due date of invoice is given under section 31. So due date of invoice for goods and for services. First, for goods we have three provisions: 31 subsection 1 normal cases, 31 subsection 4 continuous supply of goods. Continuous supply of goods means there will be successive supply of goods for which the payments are settled on a periodical basis, whereas 31 subsection 7 is sale on approval or on return basis. Now in case of normal cases, supply of goods, normal cases, we need to check whether supply involves movement of goods or supply does not involve movement of goods. If supply involves movement of goods, we need to give invoice before the date of removal. So due date of invoice is at the time of removal. Suppose if supply does not involve movement of goods, due date of invoice is at the time of delivery. Now what is the meaning of supply involving movement of goods or not? Under the contract of supply, the seller dispatches the goods to the recipient. So goods travel from one place to another place under the contract of supply, and the supply is completed only when the goods are handed over to the recipient. That is this Amazon, Flipkart. So e-commerce deliveries will come under supply involving movement of goods. Supply does not involve movement of goods means we go to the seller's place, we make a purchase and then we carry it to our home. That is supply does not involve movement of goods. Even though there is movement of goods, but that movement of goods is not under the supply. If supply involves movement of goods, due date of invoice is at the time of removal. If supply does not involve movement of goods, due date of invoice is at the time of delivery. Whereas continuous supply of goods means there will be successive supply of goods for which the payments are settled on a periodical basis. Now in that case, what should be taken as the due date of invoice? If the payments are received irrespective of the account statement, the payment received date. If the payments are received based on account statement, the account statement date. For that we have one example, that is a person enters into contract to supply gas by pipeline to a recipient, and in that case for the quarter, so every month in the quarter, say April month, May month and June month, they will be receiving a ad hoc 2 lakh rupees, and again for the quarter April to June they will be raising an account statement, and in that account statement they will mention, so total 6,56,000 and minus 6 lakhs, so 56,000 they will be giving an account statement. So that account statement is given on so 18th July. Now what will be taken? So whenever this 2 lakhs is received, this 2 lakhs is receivable irrespective of the account statement. So whenever this 2 lakhs is received, that will be taken as the due date of invoice. Again, this is also same, this is also same. But this 56,000 is based on account statement. This 56,000 is receivable based on account statement. So for this 56,000, the account statement date will be taken as the due date of invoice, that is 18th July. That is this date on which account statement is issued or the payments are received as the case may be. Sale on approval or on return basis means first we will give the goods for the person to use. If he likes the goods, it will be sold. If it is not, he will be returning the goods. That is sale on approval or on return basis. So whenever he accepts, that is the date on which sale has taken place. That date or 6 months from the date of removal. If he is not accepting within 6 months nor returning on 6 months, it is deemed that he has accepted and we need to raise the invoice. So 6 months from the date of removal or date of supply. Date of supply means date of acceptance, whichever is earlier. Now after 6 months, suppose if he returns, we already raised invoice by after 6 months treating it as supply. Now if he returns it, we need to give a credit note because we are reducing the invoice or cancelling the invoice. So we need to give a credit note in that case. Then next, services. In case of services, we have three provisions: 31 subsection 2, 31 subsection 5 and 31 subsection 6. That is normal cases, continuous supply of service and cessation of service. Normal cases, so we need to take continuous supply of service means a service which takes more than 3 months to complete. and involves periodic payment obligation, then it will be called as a continuous supply of service. So for example, construction, which takes more than 3 months to complete and involves installment payment, so then it will be called as a continuous supply of service. Cessation of service means abruptly stopping the service is known as cessation of service. So in case of supply of services, normal cases, we need to check, is it banking sector or insurance sector? Banking sector or insurance sector, 45 days from the date of completion will be taken. In case of any other services, 30 days from the date of completion will be taken. So that is the due date of invoice. Whereas in case of continuous supply of services, we need to check whether the due date of installment is ascertainable in the contract. Yes, then the due date of installment is the due date of invoice. If the due date of installment is not ascertainable, but the payment is linked to completion of one event, so whenever that event is completed, that will be taken as the due date of invoice. In the absence of these two, then as and when the installment is received, that will be taken as the due date of invoice. Due date of installment ascertainable from the contract, such due date of installment is due date of invoice. Due date of installment not ascertainable from the contract, as and when payments are received, payment is linked to completion of an event as and when the event is completed. Then in case of cessation of services, so immediately upon cessation with respect to the proportionate amount retained, an invoice needs to be issued. And here continuous supply of service, a service which takes more than 3 months to complete, it is not 2 months, it is 3 months to complete and involves periodic payment obligation, then it will be called as a continuous supply of service. Then we have time of supply in case of goods and services. So the time of supply in case of goods. So far what we have seen is due date of invoice, that is given in section 31. Whereas time of supply in case of goods is given under section 12 and time of supply in case of services is given under section 13. In that 12 subsection 1 and 13 subsection 1 says that, so if you want to determine the liability to pay tax, that liability to pay tax is dependent upon the time of supply. That is the basic objective of time of supply. So whenever for a transaction time of supply falls in a month, so then we need to pay the GST for that month by next month 20th, that is GSTR 3B due date. So the liability to pay GST is determined based on time of supply, that is given in subsection 1, which is common for both 12 and 13. Whereas subsection 2, time of supply in case of FCM. So for goods FCM, what should be taken as the time of supply? Due date of invoice or actual date of invoice, whichever is earlier. Actual date of invoice is the date on which invoice is issued. Due date of invoice is the date on which it is to be issued. So that we have seen previously, that is if it is goods, so normal cases, continuous supply of goods, sale on approval or on return basis. So that should be taken as the due date of invoice, and then actual date of invoice, whichever is earlier, should be taken. And in case of advances, whether we need to pay any GST, no, because date of payment is not given here, which means GST not payable on advances. Whereas in case of goods covered under RCM 12 subsection 3, so we need to take from the recipient point of view time of supply, that is the date on which recipient has received the goods, the date on which recipient has made payment to supplier, or 31st day from the date of invoice, whichever is earlier will be taken as the time of supply. So in this case, as date of payment is given as one of the date, whether GST payable on advances in case of goods covered under RCM, yes. So only in case of goods covered under FCM, GST not payable on advances, but in case of goods covered under RCM, GST payable on advances, because the date of receipt of goods or the date on which payment is made to supplier or 31st day from the date of invoice, whichever is earlier, will be taken as the time of supply due to that reason. Then in case of services covered under FCM, what is the time of supply? Whether the invoice is issued within the due date, yes. Then actual date of invoice or date of payment, whichever is earlier. If invoice is not given within the due date, how to know whether invoice is given within the due date? For that we need to check the due date of invoice. If the invoice is given within this due date, so then we will be taking invoice given within the due date, like 30 days or 45 days as the case may be. Then we need to take actual date of invoice or date of payment, whichever is earlier. If invoice is not given within due date, then we need to take completion date or payment date, whichever is earlier should be taken. As payment date is one of the date here, whether GST payable on advances in case of services covered under FCM, yes. Then in case of RCM 13 subsection 3, services RCM, so we don't have the first point, that is in case of goods RCM, date of receipt of goods, but that is not here. But the second point is there, date on which payment is made to supplier, and the third point, instead of 31st day, it is given as 61st day from the date of invoice. So services RCM, the time of supply will be date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. Here also, as date of payment is given as one of the date, whether GST payable on advances, yes. So therefore, except in case of goods under FCM, in all other cases, GST payable on advances. Then 12 subsection 4 and 13 subsection 4 is applicable in case of vouchers. So vouchers are instruments which are given by the supplier to recipient, and it will be accepted instead of consideration. So instead of money, the vouchers will be accepted as consideration. Now these vouchers are divided into two: identifiable voucher, non-identifiable voucher. Identifiable voucher means against which product or service it is redeemable will be mentioned on the voucher. Non-identifiable voucher means so it can be redeemable against any product or service. If it is identifiable voucher, so we need to take time of supply as the date of issuance of voucher. That is the date on which the voucher needs to be given, that should be taken, even though it is redeemed in future. So for example, today we are giving the voucher that may be redeemed in future. Today itself will be taken as the time of supply for this, and we know against which product or service it is redeemable, so we need to pay GST. What if the person has not redeemed? Unnecessarily we paid GST, that we will get as a refund. Whereas in case of non-identifiable voucher, amount will be mentioned, means it can be redeemed against any product or service, so we don't know against which product or service it will be redeemed. So therefore at the time of redemption is the time of supply. So here there is no problem in GST, because only when the voucher is redeemed, GST is payable. Suppose if the voucher is not redeemed, GST is not payable. Then in case of 12 subsection 5 and 13 subsection 5, residual sections. Residual sections means like whenever you are not able to determine the time of supply as per the above provisions, 12 subsection 2 or 12 subsection 3, 13 subsection 2, 13 subsection 3, or 12 subsection 4, 13 subsection 4, then 12 subsection 5, 13 subsection 5 will be applicable residual cases. Here we need to see, suppose if they are required to file returns, the due date of filing return. If they are not required to file returns, the date on which they will pay the tax. So mainly this will be applicable for people who are evading the tax. Then 12 subsection 6 and 13 subsection 6 is with respect to interest, late fee, penalty for delay in receipt of consideration. That should be included in the value. And what should be taken as the time of supply? It will be taxable on receipt basis, so not on accrual basis. So whenever that interest is actually received by the supplier, so then only GST payable on receipt basis. Then some additional points in this case: in case of goods covered under FCM, on advances GST not payable, and GST is payable only upon invoice, as the time of supply is due date of invoice or actual date of invoice, whichever is earlier. But in case of service under FCM, GST is payable on advances. Then up to 1000 rupees received in excess of the invoice. That is, in case of services, the time of supply is invoice date or payment date, whichever is earlier. So it so happens that we may receive some excess amount in this month itself, for which the invoice will be raised in future. Now in that case, what should be taken? If that excess amount is up to 1000 rupees, either we can go by normal provisions, that is invoice date or payment date, whichever is earlier. So we can tax that excess amount in this month itself, or we have another option also, we can take date of invoice. For this excess amount, we will be giving invoice in the next month, so next month will be taken as the time of supply. But this benefit is available only if that excess amount is up to 1000 rupees per invoice. Then what is the meaning of date of payment? From supplier point of view, date of payment means date of entry in the books or date of credit in the bank account, whichever is earlier. From the recipient point of view, date of debit in the bank account or date of entry in the books, whichever is earlier. Then in case of supply between associated enterprises, where the supplier associated enterprise is located outside India and the recipient associated enterprise is located in India, so then it is like import of services. In case of import of services, we need to generally take RCM provisions. What is that RCM provisions? Date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. So but in this case, so that invoice date is not ascertainable, that's why date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier, because between associated enterprises there won't be any invoices due to that reason. And who are associated enterprise? Associated enterprise as per Income Tax Act, wherein one entity holds 26% in the other entity, so then they both are treated as associated enterprises. Where supplier is outside India and recipient in India, time of supply shall be date of entry in the books of recipient or date of payment to supplier, whichever is earlier. Then next point, when goods are taken outside India for exhibition, is it supply or not a supply? It is not a supply. But if it is not brought back within 6 months, why it is not supply? We are taking outside India for exhibition, not for sale. Suppose if it is not brought back within 6 months, then section 31 subsection 7 will come into picture, that is sale on approval or on return basis. So whenever the goods are taken over and given possession, but if the buyer is not returning it or not giving confirmation, 6 months from the date of removal, it is deemed to have been supplied. So the same point is applied in this case. When goods are taken outside India for exhibition, it is not a supply. But if the said goods are not returned within 6 months, then it is deemed to be supply as per section 31 subsection 7. So this is with respect to time of supply provisions, section 12 and 13, and it has got the connecting provisions, that is due date of invoice, that we have completed. Now the next area that we are going to see is exemptions. So exemptions is in, I think it's after composition scheme. Yes. So exemptions in GST, we have agriculture related services, that is the first sector in exemptions. So here any service in relation to agriculture or agricultural service is exempted. That is the first point you need to remember. So there is some agriculture or there is some agricultural produce, to that if you provide any service, that will be exempted. Now what is the meaning of agriculture? Agriculture means the primary, like whatever cultivation of crops, plants, etc., or rearing of life forms of animals. For what? Rearing of life forms of animals for food, fiber, fuel, raw material, or any other similar products. But rearing of horses will not come under agriculture. Then agricultural produce means the primary produce out of agriculture on which no processing is done, or some processing as is usually done by a cultivator, which does not alter its essential characteristics. So paddy is an agricultural produce, but rice is not an agricultural produce, because rice has changed the essential characteristics, no, but it is not usually done by a cultivator. So any process that is usually done by a cultivator only will come under agricultural produce, but this paddy to rice is usually done by the rice mills. That's why rice is not an agricultural produce. Then with respect to rice, even though it is not agricultural produce, they have given some exemptions, that is loading, unloading, packing and storage of rice is exempted. That is fourth point. Then artificial insemination of livestock. Through artificial process, there will be reproduction that will be done through injections, so that will be exempted. Then next point number 6. So services by way of storage or warehousing of. So lot of goods were there, but now everything is omitted. Only cereals and pulses is exempted. So but lot of other goods previously was exempted, now that is omitted. So service by way of storage or warehousing of cereals and pulses is only exempted. Then next point, warehousing of minor forest produce is exempted. Then previously fumigation service. So we will fill the warehouse with pesticides, insecticides, etc. and all. That fumigation service was previously exempted, now it became taxable. Then slaughtering of animals. Slaughtering of animals previously was exempted and now it became taxable. These are the 3 amendments that we have on agriculture related services. Then pension services. Pension services, that is any amount contributed towards Atal Pension Yojana or any pension fund of the state government. So Atal Pension Yojana is central government pension scheme. Like that, if there is any state government pension scheme, for that they will be collecting monthly some contribution, that contribution collected will be exempted. Then banking and other financial services. So first one is related to RBI. For RBI, previously exemptions were there, but now everything will be taxable. Service provided by RBI is taxable, where RBI is liable to pay GST. Import of service by RBI is also taxable, on which RBI is required to pay GST under RCM. And overseeing committee service to RBI is also taxable, RCM. Any other service. So literally RBI services is fully taxable. And in case of import of services and overseeing committee service to RBI, RBI will pay GST under RCM. Then number 2, transaction in money. This transaction in money, suppose if it is without consideration, then it is neither goods nor services. If the transaction in money is for a consideration, then we need to check whether that consideration is interest or discount. If the consideration is interest or discount, it is exempted. So this is only I said that interest on loans, advances, deposits is exempted. Whereas interest on credit card, even though it is interest, but it will be taxable. And apart from that, any other consideration is also taxable. Like for example, commission or demand draft charges or check collection charges, all those charges will be taxable under FCM. Then third point, service provided by a banking company to basic savings deposit account holders. So these basic saving deposit account holders are under Pradhana Mantri Jan Dhan Yojana. Under that scheme, whatever savings accounts that they have opened, if they receive any service from the bank, they may pay some charges. Those charges payable by them will be exempted. Then number 4, forex transactions. Forex transactions, foreign exchange transactions between banks, between forex dealers, between banks and forex dealers is exempted. Between one bank to another bank, one forex dealer to another forex dealer, or a bank or forex dealer between them is exempted. But when it will be taxable? Only when it is between a forex dealer or bank and the customer. So then it will be taxable. So then point number 5, so that is GST on processing fee. So whenever we make some payments through payment gateway, these payment gateways, so or like banks will be collecting some processing charges. So card payment processing charges will be exempted if the payment does not exceed 2000. See, processing charges will be there even if the payment does not exceed 2000, processing charges will be there, but on that processing charges GST is exempted, that is this. Then number 6, business facilitator, business correspondent or agent of business facilitator or agent of business correspondent providing services to banking company in rural area, the commission earned will be exempted, that is this. Business facilitator, business correspondent, agent of business facilitator, agent of business correspondent providing services to rural branch, the commission earned is exempted. Then point number 7, services by intermediary. So there is a financial service intermediary who is located in multi-service SEZ. They are providing services to their clients outside India and in relation to currency other than foreign currency. Now whatever commission that they are earning will be exempted, that is the 7th point. Then next sector that we have is healthcare services. In that healthcare services by a clinical establishment, authorized medical practitioner or paramedics including ambulance service is exempted. So clinical establishment means a place where healthcare service is provided, authorized medical practitioner means so like doctors, and paramedics means nurse, lab technician, physiotherapist, compounders will come under paramedics including ambulance services is exempted. Now previously we have service provided by cord blood banks by way of preservation of stem cells, that is now taxable, and service of common biomedical waste treatment operators also previously exempted, now it became taxable. And the second exemption is healthcare service in relation to animals or birds. So now only 2 healthcare services are exempted, that is healthcare service in relation to human beings and healthcare service in relation to animals or birds. So these 2 are only exempted. Now what is the taxability here? Not all healthcare services exempted, the room rent will be taxable now. So room rent will be taxable, how much? Suppose if the room rent which is collected by the hospital, if it is ICU charges, CCU charges, so like critical care charges or neonatal critical care charges, like that, all ICU charges, all intensive care unit charges will be exempted, whatever may be the amount. If it is other room charges, if the charges does not exceed 5,000 rupees per day, then it is exempted. If the charges exceeds 5,000 rupees per day entirely, it will be taxable. This is an amendment we need to remember. What is the meaning of healthcare service? Healthcare service means pre-treatment, diagnosis, treatment and post-treatment, that is care. For what? For any disease, illness, injury, pregnancy, including transportation of the patient in an ambulance. So transportation of a patient in an ambulance may be part of healthcare service or not part of healthcare service, it is always exempted, but does not include. So cosmetic surgery, plastic surgery and hair transplantation, these 3 will not come under healthcare services. But if these 3 are carried out to restore the anatomy of body parts affected due to congenital defects, developmental abnormalities, injury or trauma, then it will be exempted. So it is healthcare service. Then clinical establishment means the place where healthcare service is provided, authorized medical practitioner, paramedics we have discussed. Then there is one more point, service provided by rehab professionals. So these rehab professionals are psychology experts who will be providing services in educational institutions or medical establishments, that is exempted. If they are working in rehab centers which is established by section 12 AA trust or by government, then it will be exempted. Suppose if they are working in private rehab centers, then it will be taxable. Then some circulars, renting of rooms to inpatient is taxable, except so that 5,000 point, beyond 5,000, up to 5,000 it is exempted. Same way, food supplied to inpatients. So any service given to the inpatients is exempted because it is part and parcel of healthcare service, including the medicine sold to inpatients also. But food supplied to outpatients, visitors or doctors, etc., that will be taxable. Then services provided by consulting doctors to hospitals is also exempted. So there is a doctor who will provide service to the hospital and hospital will provide the service to the patient. Money collected from the patient by the hospital is exempted. From the hospital, the money collected by the doctor is also exempted. Then service by way of IVF treatment. So for people who are not blessed with kids, they will undergo this IVF treatment. That IVF treatment, is it healthcare service or not? A confusion came. So it is clarified that yes, it is a healthcare service, and accordingly it is exempted. Then entry tickets. There are some entry tickets which are exempted irrespective of the ticket price, and some entry tickets are exempted if the ticket price does not exceed 500. So total here we have 8 entry tickets exempted irrespective of the ticket price. 3 things related to animals. What are they? Zoo, then tiger reserve, wildlife sanctuary. 3 things related to animals. Zoo, tiger reserve and wildlife sanctuary. Then 3 places: museum, national park and protected monuments. So total 6. Then 2 sporting events, that is FIFA Women's World Cup 2020, AFC Women's Asia Cup 2022. So these 8 entry tickets are exempted irrespective of the ticket price, whereas 9 entry tickets are exempted if the ticket price per person does not exceed 500 rupees. In that, so we have 4 performances, that is dance, theatrical performances, musical performance and concert. So dance, theatrical performance, that is drama, etc. Then musical performance and concert, these 4 performance related. Then events, 4 events: circus, then award function, then beauty show pageant and sporting event. Circus, award function, beauty event and then sporting event. Sporting event can be recognized or unrecognized sporting event, that is exempted. And planetarium. These 9 entry tickets are exempted if the ticket price does not exceed 500. What if the ticket price exceeds 500? Entirely it will be taxable. Then services by specified organizations. So these are the specified organizations: ESIC, Employee State Insurance Corporation, then Employee Provident Fund Organization, National Center for Cold Chain Development, Foreign Diplomatic Mission located in India, Coal Mine Provident Fund Organization and NPS Trust. These are the list of organizations. If they receive any amount, that is exempted. Previously, even SEBI and IRDA, SEBI, Securities Exchange Board of India, and IRDA, Insurance Regulatory Authority of India. So these 2 people were previously exempted. Now it is omitted, which means it will become taxable. Then insurance services. So group insurance fund. Group insurance fund of Army people, Navy, Air Force, Coastal Guard and Central Armed Police Forces. There will be some premium collected, premium paid by each and every person towards the group insurance fund. So that amount collected will be exempted. Then there is an insurance company which is providing general insurance services, and that general insurance services are notified by government. What are they? Usually that will be targeted to agriculture and farmers, below poverty line, women and infants and unemployed. For example, failed pump insurance, then palm seed insurance, then hut insurance. These are all some examples which is notified by government, that is exempted. Then there is an insurance company which is providing life insurance services, and that is under government notified schemes. So how to find? Usually that scheme will end with the word Yojana, Pradhana Mantri Bima Yojana, Pradhana Mantri Suraksha Bima Yojana, etc. And micro life insurance having a sum assured as 2 lakhs, means not all micro life insurance is exempted. Micro life insurance where the sum assured does not exceed 2 lakhs. For that insurance, the premium collected will be exempted. Then insurance service provided to government is exempted. So government also will take insurance services from an insurance company. That insurance services provided to government will be exempted. Let it be life insurance or general insurance. Now, these 4 points, wherever insurance is exempted, its reinsurance is also exempted. If the main insurance is exempted, we take reinsurance on that main insurance. That reinsurance is also exempted. Then charitable and religious service. So there is a trust which is registered under section 12AA or 12AB of the Income Tax Act. Now they are providing some charitable activities. What are those charitable activities? Public health, advancement of religion, spirituality, yoga, or educational program to physically, mentally traumatized persons, prisoners and persons over 65 years residing in rural area, and environmental protection. Total 4. Public health, advancement of religion, spirituality, yoga, then educational programs to prisoners and persons over 65 years residing in rural area, mentally, physically traumatized persons, and then last point, wildlife protection. These are the 4 charitable activities. Against that charitable activities, if any amount is received, that will be exempted. Then there is a old age home. That old age home is run by a government, central government, state government, or a charitable trust, and they will be receiving money from the old people. And suppose if the amount does not exceed 25,000 per month, towards boarding and lodging, and then it is exempted. What if it exceeds 25,000? Entirely it will be taxable. And then services by a person by way of conduct of religious ceremony. So priest, purohit, etc. will be covered there. Whatever money that they are earning will be exempted. Then services by special organizations for religious pilgrimage, that is Kailash, Manasarovar and Hajj pilgrimage. These two are only considered as religious pilgrimages. For that, any amount received is exempted, provided that organization is a special organization notified by government. Then education services. In this education service provided by the education institution by way of collecting entrance exam fee. There is an education institution which is collecting entrance exam fee, and only after qualifying that entrance exam fee, they will be giving admission in that education institution. So that entrance exam fee will be exempted, whether they are going to give admission to all students or not. And not only this, any amount collected by an education institution, so that will be exempted if it is collected from its students, faculty and staff. So even application fee or fee charged for issuing eligibility certificate or fee collected for issuing migration certificate, all these are exempted. So then second point, amount paid to training providers under Deen Dayal Upadhyaya Gramina Kausalya Yojana. Under this DDUGKY scheme, so some people will go to the rural area and they will be providing some training for which they will get some money, and that money earned will be exempted. Then there is service provided with respect to a training program for which 75% of the expenditure is borne by government. So there is a training service that is provided for which consideration is partly received from government and partly received from the students. Suppose if the government money is 75% or more of the total amount, so then the entire training program will be exempted. Then any service provided by National Skill Development Corporation. So this National Skill Development Corporation, below them there are Sector Skill Council, below them there are assessment agent or training partner. Mainly these four people will be providing skill services, skill coaching they will give. For that, whatever money that is earned will be exempted. Then services provided by an education institution to students, faculty and staff is exempted. Now what is the meaning of an education institution? We have three category institutions. Number 1, up to 12th standard or equivalent. Number 2, education as a part of curriculum for obtaining a qualification recognized by law. So UG, PG, CA, professional course will come there. And category 3, approved vocational education. So these three education institutions, if they collect any amount from the students, faculty and staff by way of providing any service, will be exempted. Then there is a examination board. That examination board is conducting entrance exam. Their job is only to conduct the entrance exam and give the rank, but they will not be giving any seats. So then in that case, whether that examination board will be coming under education institution, as per CBIC circular, yes, that examination board will come under education institution. So the entrance exam fee collected by them is exempted. Then services provided to education institution. Here education institution is the recipient. So there are three services provided to category 1 education institution, then only it is exempted. Transportation service, catering service, security and housekeeping service to category 1 institution is exempted. Then number 2, conduct of examination or admission to that education institution. All three category institutions it is exempted. Then online periodicals and journals, only with respect to category 2 institution it is exempted. Then whether catering service provided to Anganwadi school is exempted. Yes, Anganwadi schools are coming under category 1 education institution, that is up to 12th standard. So for them, if any catering service is provided, it is exempted, because catering service provided to category 1 institution is exempted due to that reason. That is the CBIC circular. Then training in recreational activities relating to arts and culture. So this training in recreational activities should be provided by individual only. Suppose if it is provided, there is a martial arts academy which is run by an individual, exempted. If it is run by a partnership firm, then it will be taxable. Same way culture. So arts or culture. Then in case of sports, training in sports, that sports academy should be registered as a trust. Then only the money collected will be exempted. If the sports academy is not registered as a trust, then the amount collected will not be exempted, taxable. Then services by assessment bodies under skill development initiative scheme. So we have skill development initiative scheme wherein some assessment bodies are formed. They will review the curriculum, for which from government they will receive some money. That money received by these assessment bodies under skill development initiative is exempted. Then services provided by government. We have some specified activities and other activities. These are the 4 specified activities with respect to service provided by government. that is Department of Post, transportation of goods or passengers, airport or port service, services to business entities. These 4 activities are only covered under supply, and all other activities of government will be excluded from supply. In those 4 activities also, with respect to Department of Post, what is exempted? So postcard, inland letter or any envelope where the weight is less than 10 grams, that will be exempted. Then transportation of goods or passengers, we need to check transportation service. Airport or port service fully taxable, and services to business entities, we have some specific exemptions and general exemptions. In other cases, it will be taxable. So this is the list of that specific exemptions. Okay, like interdepartmental service, one department of government to another department of the government. Then telecom spectrum allocated before 1/4/2016, both one-time charges and annual royalty. Right to use natural resources allotted before 1/4/2016, only one-time charges. Suppose to an individual farmer, if the natural resources are allotted, both one-time charges and annual royalty. Then merchant overtime charges, because customs department will be working after office hours, so that charges is also exempted. Then profit petroleum. So whenever government is giving the leasing right to extract the petroleum crude or natural gas, they get a share of profit. That share of profit is exempted. Then safety certificate charges issued to the establishments which are dealing with public at large. So that safety certificate charges is exempted. Registration charges under any law for the time being in force. Then consideration for tolerating an act, that is damages collected for breach of contract, is exempted. Then fee for birth certificate, death certificate, driving license, visa, passport. So these amounts are exempted. Then number 11, guarantee commission. Guarantee commission, whenever the loans are taken by PSUs, that loans will be guaranteed by the government, for which government gets a commission from the PSUs, that commission is exempted. Then excess royalty collection contractor, to the extent of variable royalty, is exempted, because on that variable royalty the leaseholder will pay GST. Then for crossing 2 states or between multiple states, when you are taking transportation of goods in lorries, we need to get a national permit or permit charges. That national permit charges will be exempted. Then we have some general exemptions. Services other than those covered under general exemptions provided to a business entity whose aggregate turnover during the previous year does not exceed threshold limit. However, this exemption is not applicable to renting of immovable property services. Then second, if the value of supply does not exceed 5,000, then also it will be exempted. But this is applicable even for renting of immovable property. You can see here, that's it, 6, input tax credit. First, we need to understand what are the various returns that are there. GSTR1 is a return that contains the details of outward supply. So only outward supply data we enter in GSTR1 as per section 37. GSTR2A and 2B are the statements that are generated by the system, that is GST portal, which is auto-populated statement based on GSTR1 filed by our supplier. Suppose if we need to take ITC, our supplier has to file GSTR1, and from there it will be auto-populated into 2A or 2B. And 2A is a dynamic document, it will keep on changing, but 2B is a static document. And whether we need to take ITC on the basis of 2A or 2B, only on the basis of 2B ITC to be taken. And this 2B is notified in section 38. Then GSTR 3B is a return that contains the details of all the outward supplies, liability, input tax credit and net liability, then interest or late fee, etc. That is a return to be filed. So we will take ITC only in GSTR 3B. That is, availment of ITC happens in GSTR 3B. This is the difference between 2A and 2B. 2A is dynamic document, means it keeps on changing whenever the supplier updates his GSTR1, but 2B will be static. So by due date, whatever returns that are submitted by the supplier, that is GSTR1 submitted by the supplier, that information only is captured in 2B of that month. TDS or TCS details will not be there in 2B, but it will be there in 2A. And details of invoices, if GSTR1 filed after due date, even if it is filed after due date in 2A, it will be reflected, but 2B it will not be reflected. However, it will be reflected in the next month. And purpose of 2A is only for reference purpose, but 2B is for the purpose of availment of ITC. So how ITC will be availed? So the supplier will be making outward supplies, and he will enter that outward supplies in GSTR1 or IFF, and he need to file that by due date. So then it will be reflected in GSTR 2B of the recipient, and whatever is there in 2B of the recipient, that will be availed in 3B, and thereafter how much ITC should be availed in 3B? ITC as per 2B, ITC as per 2B minus ineligible ITC. Ineligible ITC is blocked ITC or used for non-business purpose or used for exempted supplies plus GST under RCM. So if inward supply is blocked credit or inward supply is used for exempted outward supply or inverted supply is used for non-business purpose, that should be taken out. It may be matched ITC, but it should be taken out. Then whatever GST paid under RCM, it will not be coming in 2B, so that should be added. So this will be taken as the ITC in GSTR 3B. And as per section 41, only matched ITC can be availed now and unmatched ITC cannot be availed. That is an amendment. Next one, section 49. What is the manner of utilization of credit? First principle, that is there is no restriction with respect to IGST, which means IGST credit can be utilized for payment of any GST liability and any GST credit can be utilized for payment of IGST liability. With respect to the other three, that is CGST, SGST and UTGST, respective credits only can be used for payment of respective liability. Whereas second principle is about the priority. Whenever we have the IGST credit, first IGST credit should be used for payment of IGST liability, then CGST, SGST or UTGST liability in any manner, any proportion. What about CGST, SGST and UTGST credit? First for its liability and then for IGST payable. Then principle number 3, before utilizing CGST credit, SGST credit, the credit of IGST should be exhausted. Then principle number 4, for payment of IGST liability, credit should be utilized in the following order. So we have multiple credits, only one liability, that is IGST liability. So first we need to use IGST credit, then CGST credit, then SGST or UTGST credit. So whenever you are utilizing IGST credit for payment of IGST liability, thereafter we are utilizing for CGST, SGST or UTGST, we need to do a tax planning there. What is that tax planning? So there are multiple answers possible. So then what we need to do is that finally the net liability should be less. So that net liability will be total gross liability minus total ITC. IGST credit after utilizing for payment of IGST liability can be used for payment of CGST, UTGST, SGST in any proportion. So multiple answers possible in exam. So therefore, depending upon the CGST, SGST liability, if you apportion, so usually we will get the correct answer only. Okay. Then next one, section 16, conditions for availment of ITC. So total, this is section 16. So total some conditions are there. So 8 conditions are there. Only a registered person can avail ITC. Unregistered person cannot avail ITC. And the inward supply should be used or intended to be used in the course or furtherance of business. And then they should be in possession of tax paid document, who the person who is availing ITC. What are those tax paid documents? Tax invoice, debit note, ISD invoice and bill of entry. These are the tax paid documents, and the person who want to avail ITC should be in possession of these tax paid documents. Should have actually received the goods or services. For example, invoice in 1 month and goods are received in the subsequent month. ITC can be availed only in the subsequent month, not in this month based on invoice. Then supplier should have furnished the details of supplies in GSTR 1, because now we can take only matched ITC. So the supplier should report the details in GSTR 1, and that details which is reported in GSTR 1 should be made available to the recipient in 2B, which means it should be filed by the supplier by due date. GST paid on inward supply should be reflected in GSTR 2B under ITC available. In 2B there are 2 columns, ITC available, ITC not available. So it should be reflected in ITC available. If it is reflected in ITC not available, then we cannot take that input tax credit. And supplier should have paid the tax with respect to such supply. So whenever we are taking the ITC, so the supplier should have paid the tax, otherwise we need to reverse the ITC. Then should have filed the return. So these are the 8 conditions. If all these 8 conditions are satisfied, then ITC can be availed. Suppose if these conditions are not satisfied, ITC should not be availed. If ITC is already availed, that needs to be reversed. Reversal of ITC means reduction from the ITC, and suppose if you don't have balance in ITC, then reduction not possible, then we need to make the payment. Then we have meaning of input tax. Input tax means what? CGST, SGST, UTGST. So that is paid under FCM. Even GST paid under RCM also can be availed as ITC. Even IGST paid on import of goods also can be availed as ITC. However, composition tax cannot be availed as ITC, because first of all, a person opting for composition scheme should not charge GST to recipient. Even if they charge GST to the recipient, that recipient cannot avail that as ITC. Then there should be proper document for the purpose of availment of ITC, because one of the conditions is that the person should be in possession of tax paid document. So whether a document containing minimum details will be called as a tax invoice. Yes. So what are the minimum details that should be present? It should contain description of goods or services, GSTN of supplier and recipient, value and tax, and then place of supply. So total 5: description, value of supply of goods or services, GST, GSTN of the supplier and recipient, place of supply in case of interstate supply. These 5 details, if it is there in a document, that document will be called as a tax invoice. Then inward supplies means what? Inward supplies means it can be inputs, input services, or capital goods. Inputs means which are charged to P&L other than capital goods. Capital goods means which are capitalized, is known as capital goods, and input service means any service received. But all these 3 should be used or intended to be used in the course or furtherance of business. Then there is a concept of deemed delivery. When the goods and services are supplied to one person on behalf of our recipient, the date on which that person who received the goods or services is deemed that our recipient also has received the goods or services, and our recipient can take ITC. For example, bill to ship to transaction. We raised invoice to our recipient, but the goods are delivered to a third person. The date on which goods are received by the third person, it is deemed that our recipient has received the goods. Same is the case of services also. That is this deemed delivery concept. Then goods received in lots or installments. So against a single invoice, when the goods are received in batches, lots, or installment, ITC can be availed only upon receipt of last lot or installment. Then next, reversal of ITC for non-payment of consideration. So that is, whenever I have got the invoice, I can take ITC. If I am not making payment to my supplier within 180 days from the date of invoice, so much of the ITC that I have availed needs to be reversed along with interest at the rate of 18% per annum. But now 18% per annum should be computed. Interest should be computed from the date of utilization till the date of reversal, not from the date of availment, from the date of utilization till the date of reversal. And this point is not applicable in case of supplies covered under RCM 9(3) and supply without consideration and payment made to some other person on behalf of the supplier 15(2)(b). And suppose if ITC availed and not at all utilized, so then also this interest provision will not be applicable, but we need to reverse the ITC. So that is with respect to this. And very important point here, interest should be computed from the date of utilization till the date of reversal. Then ITC can be availed as and when the payment is made to supplier after 180 days. After 180 days, we are reversing the ITC along with interest. Again, as and when the payment is made, we can re-avail it as ITC and there is no time limit. But the interest paid cannot be re-availed. Then section 16 subsection 3, GST is added to the asset and we claim depreciation. Then in that case, ITC not available. For example, a person purchased a capital goods for 10 lakhs and the GST is 1,20,000. If depreciation is computed on 11,20,000, then ITC of 1,20,000 is not available. And section 16 subsection 4, time limit for availment of ITC. The time limit for availment of ITC is 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. And this time limit is not applicable in case of re-availment of ITC. So reversed earlier. First we will avail the ITC, then we will reverse it. Again we are re-availing. So this time limit will not be applicable in that case. Then in case of debit note, we need to see the time limit based on the debit note date. Not based on the invoice date, but based on the debit note date. Suppose if debit note comes in financial year 22-23, so then 30th November 2023 or date of filing annual return, whichever is earlier, like that. But invoice may be pertaining to any year, that is irrelevant. So we need to see the debit note date, that is this point. Then 17 subsection 1, 2 and 3 talks about apportionment of credit. In that, what we have learnt is that if inward supplies are used for taxable outward supplies or business purpose, you can take the ITC. If inward supplies are used for exempted outward supplies or non-business purpose, ITC not available. When inward supplies are partly used for taxable and partly used for exempted, proportionate ITC available. If inward supplies are partly used for business and partly used for non-business, then also proportionate ITC available. And what is the meaning of zero rated supplies? So taxable supplies include zero rated supplies. Zero rated supplies means export of goods or service and supply of goods or services to SEZ. So even though in that case of zero rated supply, we have two options, that is pay IGST or pay IGST and get refund, or don't pay IGST and you get the refund of ITC. But whatever the case may be, zero rated supplies will be treated as taxable supply for the purpose of availment of ITC. Then what is the meaning of exempted supplies? So the meaning of exempted supplies is for the purpose of reversal of ITC. Number one, supplies which are notified as exempted other than interest on loans and transportation of goods by vessel from India to outside India. But remember, transportation of goods by vessel from India to outside India is exempted only up to 2022. So up to 2022 only it is exempted. Thereafter it is taxable. So therefore, up to 2022 it is exempted for payment of GST, but for ITC purpose it will be treated as taxable. Same way, interest on loans, advances, deposits is exempted, but for ITC purpose it will be treated as taxable. So supplies notified as exempted other than these two. Then nil rated supplies, non-taxable supplies. So non-taxable supplies, alcoholic liquor for human consumption and petroleum products. Then these three normal, notified as exempted, nil rated and non-taxable. But supplies which are covered under RCM, even though that is taxable in the hands of recipient, but for the supplier it will be treated as exempted supply. Then sale of land, sale of building, sale of securities. These three are also treated as exempted supply. In case of land and building, we take stamp duty value. In case of securities, we take 1% of the sale value of the securities. The following are treated as, actually the following are treated as taxable even though it is exempted. What are they? So loans, advances, deposits are transportation of goods by vessel. So this is exempted up to 39/2022 with effect from 1/10/2022 it is taxable. So consequently it will be treated as taxable for availment of ITC. Then if gifts or free samples is treated as supply. Suppose I am purchasing some product and as an employer and I am giving it as gift to my employee. If the value of this gift exceeds 50,000, so then I can take ITC on the inward supply. Generally, there is one point, that is if my outward supplies are blocked credit. Suppose if I am purchasing something as gift and I am giving it as, like if I am purchasing something and distributing it as gifts or free samples, it's a blocked credit. So ITC not available. But in this case, what they are telling, if the gift or free sample is supplied under 7(1)(c), then we can take ITC. So that is this. So employer purchased a gift and given it to employee. If the value of the gift exceeds 50,000, so definitely it is supply, because gifts exceeding 50,000 per annum is supply. So therefore the employer can take ITC even though it is a block credit. Suppose if the value of the gift does not exceed 50,000 per annum per employee, it is not a supply. So the employer cannot take ITC with respect to the gift purchase. That is this. Then 17 subsection 4. Special provision for availment of ITC by banking company, financial institution including NBFC. So they have two options. Option 1, they will avail the proportionate ITC. What is that proportionate ITC? Total ITC into taxable turnover divided by total turnover. Or option 2, they will avail 50% of the eligible ITC. That is total ITC into 50%. Okay. Now here exclusive used for non-business purpose and exempted supply, ITC should not be availed. Remaining 50% ITC shall be lapsed. And restriction of 50% not applied to tax paid on inward supply from another registration of the same person. That is with respect to inward supply from distinct person, whenever you are going for option 2, that is this 50% ITC option, inward supply from distinct person, full ITC you can take, no need to reduce 50%. And this option 1 and option 2 exercise, once exercised in a financial year, cannot be withdrawn during remaining part of the financial year. Then we have blocked credits, that is 17 subsection 5. In that, motor vehicle, total block credits are divided into 3: motor vehicle related block credits, and then construction related block credits and other block credits. In that, motor vehicle related block credits, you are purchasing motor vehicle. So that motor vehicle is used for transportation of persons and capacity does not exceed 13. It is a block credit. However, in these three cases, ITC available. Exceptions. What are those three exceptions? If it is used for further supply, purchase and sale, or purchase and renting, or if it is used in the business of transportation of passengers or imparting motor driving skills. In these three cases, even though capacity does not exceed 13, which is a block credit, exception to the block credit, ITC available. What if the capacity exceed 13? Capacity exceed 13, ITC not available. ITC available, sorry, it is not a block credit, ITC is available. That is not a block credit, ITC always available. Vessels and aircraft. Vessels and aircraft is block credit, ITC not available. However, we have 4 exceptions. What are those 4 exceptions? Further supply, or used in the business of transportation of passengers, imparting driving skills. Extra we have used for transportation of goods, which is not there in this place. So it is there in this place. So these 4 cases ITC available, even though it is block credit, vessels and aircrafts, and all other motor vehicles is not block credit. So ITC available. So other motor vehicles like trucks, lorries, bus, big road rollers, then JCBs, etc., or other motor vehicles on which ITC can be availed. Then next one, repairs for services in relation to motor vehicles: repair and maintenance, then insurance, servicing, hiring, leasing and renting of motor vehicles. So these 4 services in relation to motor vehicles, vessels and aircrafts. If that motor vehicle, vessel and aircraft is eligible for ITC, then on these services also GST paid can be taken as ITC. If these motor vehicles are not eligible for ITC, then on these service whatever GST paid cannot be availed as ITC. Further supply includes purchase and sale of motor vehicles or motor vehicles used in the business of renting, hiring or leasing. Repair insurance service of motor vehicle received by general insurance company is always eligible for ITC. Then hiring, renting and leasing of motor vehicles as a statutory obligation. That is, a company is taking motor vehicle on rent as per a statutory obligation. So then in that case, even though it is block credit, but ITC is available in that case. These are exceptions. Then construction related block credit. There are 3 inward supplies which are block credit when it is used for construction of an immovable property. What are they? Any service in relation to construction, works contract and any goods in relation to construction of an immovable property. It's block credit. And then in that case, so is there any exceptions? Yes, there is an exception. This discussion is applicable only to owner of the property. If a supplier of construction service is purchasing goods or receiving any service, he can take ITC because the restriction is only to owner of the property. Then construction of plant and machinery. So plant and machinery, even though immovable, for construction of plant and machinery, so this restriction is not applicable, ITC available. But plant and machinery excludes telecommunication towers and pipelines laid outside the factory gate. Then if construction expenditure is charged to P&L, so then also we can take ITC with respect to this. These are the 3 exceptions. Then other block credits. Membership of a club, health and fitness center, exception. If it is under a statutory obligation, ITC available. So otherwise it is block credit. Travel benefits extended to employees on vacation. So exception. Suppose if it is under a statutory obligation, ITC available. Then non-resident taxable person. NRTP who come from outside India to India and is not having any physical place of business in India. So exception is import of goods by NRTP, they can take ITC. Food and beverages, outdoor catering, beauty treatment, then life insurance. So remember 3 things: food, beauty, insurance. Food and beverages, outdoor catering, beauty treatment, hair transplantation, plastic surgery, insurance, life insurance or health insurance. This is block credit. However, we have 3 exceptions. Exception number 1, if inward supply, outward supply, same category. I am receiving inward supply food and beverages, outward supply also food and beverages, I can take ITC. Number 2, inward supply is part of outward supply, which is composite or mixed outward supply. So inward supply food and beverages, outward supply transportation of passengers by air, and we are also supplying food and beverages to the passengers. Inward supply is part of outward supply, ITC available. Or if it is under a statutory obligation, ITC available. Then other cases, suppose if we are purchasing from a person opting for composition scheme, it's a block credit. If we are purchasing something which is for personal consumption, then also it is block credit. If goods are lost, stolen, destroyed, written off, so then it is also block credit or disposed of by way of gifts or free samples. But for this one exception we already discussed, if that gifts or free samples become supply, then we can take ITC with respect to this. Then section 18, input tax credit in special circumstances. In that 18 subsection 1 talks about availment of ITC on closing stock. So there are total 4 clauses given here: 18, 1A, 1B, 1C, 1D. In all these cases we can avail the ITC on closing stock. 1A says a person is liable to get registered and he makes application for registration within 30 days. 1B, voluntarily he is getting registered. 1C, registered person converting from composition scheme to normal scheme. 1D, registered person who was making exempted supply, now he starts making taxable supply. Now in case of 1A and 1B, they can avail ITC on closing stock. What is the closing stock? Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. Whereas in this case, the meaning of closing stock is slightly different. Here we have even capital goods also. Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, and even capital goods also they can take ITC. Which date closing stock we need to see? In case of 18-1A, before the date they are liable to get registered. 18-1B, before the date they got registration certificate. 18-1C, before the date of conversion from composition scheme to normal scheme. And 18-1D, before the date of conversion from exempted supplies to taxable supplies. And 18 subsection 2, with respect to this 18 subsection 1, this closing stock should have been purchased that is within 1 year prior to the closing stock date. Means the invoice date to the closing stock date should not exceed 1 year, including for capital goods this will be applicable. Then some special points in this regard. ITC with respect to GST paid on inputs only can be availed fully, but in case of capital goods we need to reduce 5% like depreciation. So ITC with respect to capital goods, GST paid minus 5% for every quarter or part thereof from the date of purchase till the date of closing stock conversion date. Okay, and we need to file an electronic declaration for availing this ITC. That electronic declaration is in form GST ITC 1, and that should be duly certified by a chartered accountant or cost accountant if the amount of ITC exceeds 2 lakhs, and this form should be filed within 30 days from the date they are eligible to take ITC. In case of 18-1A, they are eligible to take ITC after the date they get registration certificate. 18-1B also after the date they get registration certificate. 18-1C 1D after the date of conversion. Okay, then 18 subsection 3, transfer of ITC. Transfer of ITC whenever there is a transfer of business, sale, amalgamation, merger, demerger, or whatever may be the transfer of business, including change in constitution of business, sole proprietorship to partnership, partnership to company, or in case of inheritance, death by sole proprietor, any transfer of business, but that transfer of business should be with specific provision for transfer of liabilities. Then whatever is the unutilized ITC in the electronic credit ledger of the transferor gets transferred to the electronic credit ledger of the transferee. For the transferor should file one form, that is ITC 2, and this ITC 2 should be certified by a chartered accountant or cost accountant. Certification about what? That this transfer of business is with specific provision for transfer of liabilities. Then in case of demerger, what they need to do? In case of demerger, so single company is split into 2 companies, so therefore the ITC will be transferred to these 2 companies in the ratio of assets after demerger. Then transfer or change in ownership also includes transfer or change in ownership due to death of sole proprietor. When a single registration is getting converted into multiple registration within the state, then ITC with respect to the single registration will be distributed to the multiple registrations. For that they will file one form, that is ITC 2A. On what basis this ITC will be distributed? On the assets ratio, that is single registration within the state is getting split into multiple registrations. So then the ITC will be transferred to all those registrations in the ratio of assets as on the date of registration. For that one form will be filed, that is ITC 2A. Then 18 subsection 4 read with section 29 subsection 5, that is reversal of ITC. Reversal of ITC on closing stock is possible in 3 cases. That is a person who is under normal scheme, now he is going into composition scheme, or a person whose outward supply was taxable, now it became exempted, or cancellation of registration. So before that date we need to see the closing stock. Whatever ITC we availed on inputs and whatever ITC we availed on inputs which is in WIP in stock, whatever ITC we availed on inputs which is in FG in stock, so that ITC availed we need to reverse. Okay, then in case of capital goods, how the reversal will be? Total ITC divided by 60 months into balance useful life. While availing the ITC on closing stock, so we will be reducing 5% for every quarter or part thereof and we avail. While reversing, it is total ITC divided by 60 months into balance useful life. This is the way in which we need to do the reversal. Now some special points related to this. Inputs and capital goods can be purchased anytime. So there is no time limit that it should have been purchased within this time, can be purchased anytime. Suppose if invoice details are not available, so then we will be taking the market value in that case. Then if capital goods are purchased before 5 years on which ITC availed, then reversal shall not arise because 5 years is over. And Tran 1 credit should be considered if the inputs and capital goods are purchased in the earlier tax period. If invoice pertaining to that inputs is not available, then we need to take market value, and that should be duly certified by a practicing CRCMA, and they need to file one form, that is ITC 3. ITC 1 is for availment of ITC on closing stock, ITC 2 transfer of ITC, ITC 2A transfer of ITC in case single registration is split into multiple registrations, ITC 3 is for reversal of ITC on closing stock. If there is balance in ITC after reversal, it shall be lapsed. And if there is any shortfall for reversal, then such shortfall shall be payable using the cash ledger. Suppose if there is no shortfall, we will reverse, and what happens to the balance in ITC? The balance in ITC that shall be lapsed. And this computation we need to make separately for CGST, SGST, UTGST and IGST, means column wise we need to present. Then section 18 subsection 6, the last section, that is whenever I purchase the capital goods, on that capital goods when I have availed the ITC, I purchase capital goods on which I have availed ITC. Now that capital goods are disposed of, then what is the GST that I need to pay? So much of the ITC availed on capital goods as reduced by 5% for every quarter or part thereof from the date of purchase till the date of sale, or GST on sale value whichever is higher. And Whereas in case of refractory bricks, molds and dies, jigs and fixtures which are sold as scrap, ERB whichever is higher is not applicable, only B, that is GST payable on sale value. This is with respect to input tax credit. Then the next area is registration, that's it 7, registration. So in this registration, the first thing, there are total 9 sections. Section 22, when a person is required to get registered, 23, exempted from registration, 24, compulsory registration. These are the 3 sections which are very, very important. Now, section 22, subsection 1 says that whenever a person's aggregate turnover exceeds threshold limit, they are required to get registered. So what is the threshold limit for registration? If you are doing business only in one state, and if that one state is in MMTN, Manipur, Mizoram, Tripura, Nagaland, then the limit will 10 lakhs, let it be goods or services. Suppose if you are doing business in one state and that one state is U-stamp, Uttarakhand, then Sikkim, Arunachal Pradesh, Meghalaya, Pondicherry and Telangana, then the limit will be 20 lakhs, let it be goods or services. Suppose if it is other states, then if you are exclusively engaged in supply of goods, it will be 40 lakhs. If you are engaged in supply of both goods and services or services, it will be 20 lakhs. That is with respect to this. And aggregate turnover should always be computed on an all India basis and not state wise. And the limit of 40 lakhs is applicable only in case of exclusive supply of goods. If they are engaged in supply of goods and services or supply of services, then the limit of 20 lakhs or 10 lakhs is only applicable. Suppose if you are doing business in multiple states, then what will happen? If one of the state is in special category state, Manipur, Mizoram, Tripura, Nagaland, and taxable supplies are made from that state, then the limit will be 10 lakhs. Suppose if the supplies are made from multiple states, and in those states, if U-stamp is also one of the state, then always 20 lakhs only, 40 lakhs limit will not be applicable. So when 40 lakhs limit will be applicable, none of the states should be MMTN U-stamp, and they should be exclusively engaged in supply of goods, then only 40 lakhs will be applicable. Then the limit of 40 lakhs is not applicable in the following cases. Suppose if they voluntarily get registered, or who are compulsorily required to get registered under 24 irrespective of threshold limit, or person making supply of ice cream, edible ice, pan masala, tobacco and tobacco products, then bricks and roofing tiles. In composition scheme also we have this list, but in composition scheme we have aerated waters, but here we don't have the aerated waters. And in composition scheme, manufacturer of these notified goods cannot opt for composition scheme, but a trader can opt for composition scheme. Here, any person who is making exclusive supply of these goods will not get 40 lakhs limit. Let it be manufacturer or trader, they will not get the 40 lakhs limit, only 20 lakhs will be the Econas limit. And that is this, as and when aggregate turnover during a financial year exceeds threshold limit as discussed above, they are liable to get registered. Then section 23, exemption from registration. So when they are exempted from registration, if they are exclusively engaged in making exempted supplies or non-taxable supplies, or if they are an agriculturist to the extent out of cultivation of land, or if they are exclusively engaged in RCM supply. So exclusively exempted, exclusively non-taxable, exclusively covered under RCM, and agriculturist to the extent out of cultivation of land. Suppose if a person is making both taxable and exempted, then in that case they need to register if their aggregate turnover exceeds threshold limit. And compulsory registration, as per section 22 also we have compulsory registration. If they are already registered under earlier indirect tax law, they should definitely register. If there is any transfer of business by a registered person, transferee should definitely register. And if there is any transfer of business owing to amalgamation, merger or demerger, then also registration is required. Transferee should register. But in these 3 cases, so if their aggregate turnover does not exceed threshold limit, so then they can come out of the registration. That advantage is there. So in these 3 cases, they can come out of the registration if their aggregate turnover does not exceed threshold limit, which means, so if they are no longer liable to be registered, they can make an application for cancellation of registration. But 24 case, they cannot do that. They should always be registered. So that section 24 compulsory registration is I creations. I for interstate supply of goods other than handicrafts, then CTP, casual taxable person other than handicrafts, then recipient who is liable to pay GST under RCM, then ICR, E for e-commerce operator. So e-commerce operator who is liable to pay GST under 9(5), that HATE, H-A-T-E, housekeeping service, accommodation service, transportation service and eating food from a restaurant. In that case, the e-commerce operator is liable to get registered. Then agent making supply on behalf of principal. When an agent will be called as making supply on behalf of principal, whenever he issues invoice in his name, in case of purchase, invoice is in his name. Then T for TDS deductor. TDS deductor under section 51 is also compulsorily required to get registered. I creations. I for input service distributor who avail the ITC head office which avail the ITC and distribute the ITC to the branches, that is input service distributor. Then OIDR supplier located outside India and making supply to non-taxable online recipient in India. Then N, non-resident taxable person, and S, supplier of goods through e-commerce operator. I creations. So these people are compulsorily required to get registered irrespective of the threshold limit. And here section 23 overrides section 22-24, which means if a person is exempted from registration, they are exempted from registration and they are not required to get registered. Section 24 overrides section 22. Suppose if a person is compulsorily required to get registered, they need to register irrespective of the threshold limit. That is this point. Then section 25 talks about the procedure for registration. To understand this procedure for registration, total 6 forms you need to remember. REG1, application for registration. REG2, acknowledgement. REG3, notice. And REG4, reply to the notice. REG5, cancellation, that is rejection of application. REG6, certificate of registration. Whenever we make application for registration, the acknowledgement will be given immediately. And suppose within 7 working days, either we need to get certificate of registration or notice. If neither certificate of registration nor notice within 7 working days, then it is deemed registration. Once we give notice, within 7 working days, we need to give reply to the notice. After we give reply to the notice, within 7 working days, either they need to reject the application or they need to give certificate of registration. Neither rejection of application nor certificate of registration, then also it will be deemed registration. So this is the time limits, and this procedure for registration is not applicable to not you. So that is NRTP, non-resident taxable person, OIDR supplier located outside India, TDS, TCS deductor, and UIN holder. So NRTP means who come from outside India to India, who is not having any physical place of business in India. Whereas CTP is from other state to this state, who is not having any physical place of business in this state. Okay. So CTP, for CTP, whether this procedure is applicable, yes. Only for NRTP, this procedure is not applicable. Who is a UIN holder? Unique identification number holder is UN agency, embassy or consulate which is located in India. So their outward supplies are exempted, but on their inward supply, whatever GST they paid, they can take it as ITC. For that, one recognition is given, that is UIN holder. And whenever you are making application for registration, Aadhaar authentication is mandatory, and that has to be completed within 15 days of submission of Part B of REG1. And whenever you complete the authentication, or 15 days, whichever is earlier will be taken, as the date of submission of application. Suppose what will happen if you are not opting for Aadhaar authentication or opted for authentication and not completed within 15 days, then they will conduct the physical verification of premises and then only they will grant the registration certificate. But this Aadhaar authentication is not applicable in some cases. What is that? Suppose if a person is individual or sole proprietor, everyone should undergo Aadhaar authentication. What if they are not a citizen of India? Then it is not applicable. HUF, who is required to undergo authentication? Karta, but other members of HUF not required. In case of firm or LLP, authorized or managing partner required to undergo authentication, but other partners not required. In case of company, body corporate or any other entity, only authorized signatory required to undergo authentication, but other members not required. Government, fully it is excluded. Central government, state government department, local authority, statutory body, public sector undertaking, and finally UIN holder. These are the 9 points you need to remember, wherein they are not required to undergo authentication. So they are not required to undergo authentication even though they have already registered, but other than above, so they need to undergo authentication even if after registration. Okay. Then deemed registration. What is this? Aadhaar authentication completed means application is filed. Neither REG3 nor REG6, that is neither notice nor certificate within 7 working days, deemed registration. Aadhaar authentication completed, neither REG5 or REG6. REG5 is rejection of application, REG6 is certificate of registration within 7 working days from the date of reply. So then also deemed registration. Aadhaar authentication not completed within 15 days of submission of Part B. So then thereafter within 30 days, so they need to grant the registration after physical verification. If they have not done, then also deemed registration. We selected itself without authentication. Then from the date of application within 30 days, they need to grant registration, otherwise also deemed registration. So this deemed registration can be separately asked as short note. Then what is the time limit for making application for registration? Generally the time limit is within 30 days from the date when a person is liable to get registered. But in case of CTP and NRTP, they need to make application for registration at least 5 days before commencement of business. In all other cases, within 30 days. Suppose if they are compulsorily required to get registered within 30 days from the start of business, or if they are required to get registered under earlier law, so they are required to get registered under GST within 30 days from 1/7/2017. And suppose if there is any transfer of business, date of transfer within 30 days, and suppose if it is amalgamation merger, whenever the new company gets the certificate of incorporation from there within 30 days. In any other case, whenever their aggregate turnover exceeds threshold limit from the date within 30 days, that is the time limit for making application for registration. Then section 27. Section 26 is deemed registration. Now section 27, special provision for CTP and NRTP. So they need to make application for registration, and the registration granted to them is a temporary registration. So for maximum period of 90 days, and it can be extended for a further period not exceeding 90 days. So the registration granted to them will be maximum 90 days plus 90 days, and it can be extended for a further period of 90 days. So in total it will be 180 days, and for the period for which they are making application for registration as a CTP and NRTP, they need to deposit advance tax based on their estimated net tax liability. That advance tax will be deposited into the cash ledger, and it will be adjusted against the liability. Suppose if still there is a balance in cash ledger, they will be able to get it as a refund. And suppose if 90 days is over and again they are going for extension, for that extended period again they need to make an advance tax deposit. Then the distinguishing points between CTP and NRTP: CTP is a person who occasionally undertakes transactions and who come from outside India, that is CTP from other state to this state, and is not having any fixed place of business in this state. But NRTP, a person who occasionally undertakes transaction involving supply of goods or services and is not having fixed place of business in India. And CTP so should be making transactions in the course or furtherance of business, no such requirement for NRTP. And CTP should have a permanent account number, and NRTP not require a permanent account number. Using passport they can get the registration. CTP should make an application for registration in regular REG1, but NRTP REG9. And CTP should file return in GSTR 1 and 3B, but NRTP in GSTR 5. So that is the difference between CTP and NRTP. Then section 28, amendment in registration. So when there will be amendment in registration, whenever there is any change in the detail which was originally submitted, then there will be amendment in registration. But remember, if there is a change in permanent account number, then amendment in registration is not possible. We need to go for new registration. And this amendment in registration, if there is a core field, core field means change in name, change in address and change in top management, then the application for amendment will be subject to approval by the proper officer. If there is any other change, then automatically it will be updated by the portal. And retrospective amendment is not possible without the permission of commissioner. So change in constitution resulting in change in permanent account number requires cancellation of old registration and obtaining new registration. What is the procedure for amendment in registration? We need to submit REG 14, application for amendment in registration, within 15 days of change, and thereafter they will give a notice if they are not satisfied in REG 3 within 15 working days. We make application within 15 days, they give notice within 15 working days. Or suppose if they don't have any discrepancy, they will pass an order within 15 working days. Suppose if they give a notice, we need to give reply to that notice within 7 working days, and thereafter within 7 working days either they will be granting the amendment or they will be rejecting the application. That is with respect to this. Then section 29 talks about cancellation of registration. Cancellation of registration is possible total in 8 situations. In that the first 3 situations, either a registered person can make application for cancellation, or suo motu proper officer can initiate cancellation of registration. What are they? If there is any transfer or discontinuance of business, or change in constitution of business, individual to firm, firm to company, etc., or a taxable person is no longer liable to be registered. In these 3 cases, there will be cancellation of registration. And remember, whenever a person is making application for cancellation of registration, Aadhaar authentication is mandatory. And suo motu cancellation by the proper officer, that is, whenever there is contravention of provisions of the act or rules, or a person who is under composition scheme not filed annual return GSTR 4 within 3 months after due date. The due date is 30th April. After the due date, within 3 months, if they are not filing annual return, or if they are under normal scheme and they are not filing returns for consecutive 6 months or 2 quarters, so then also the registration is liable to be cancelled. Or if the registration is obtained by fraud or obtained voluntary registration and not commence business within 6 months. So these are the 5 situations where proper officer will initiate cancellation of registration by giving show cause notice in REG 17. Then next, what is the meaning of contravention of the provisions of act or rules? So for that, we need to remember total 7 points. What are the provisions? That contravention of which will lead to cancellation of registration. 3 wrong things. Wrong invoice, wrong ITC, wrong address. First one, wrong address. Then wrong invoice. Then wrong ITC, point number E. Then 3 violation. Violation of furnishing of bank details, violation of anti-profiteering, and violation of payment of 1% through gross liability. Then one more point, that is liability in GST 1 greater than 3B for 1 or more tax period. These are the 7 cases where the registration of a person will be cancelled on the grounds of contravention of provisions. Then suspension of registration. During the time when officer initiate cancellation of registration, the first step that they do will be suspension of registration, and this suspension of registration is at the option of the officer. So whenever they do the suspension, what is the period for which they do the suspension? Suppose if application is made by the registered person for cancellation, the date selected in the application or the date of application, whichever is later, till the conclusion of cancellation proceedings. Suppose if proper officer initiate cancellation, they will give a notice and they will specify from which date the suspension will start, from that date till the conclusion of cancellation proceedings. During the period when their registration is suspended, they cannot give tax invoice on their outward supplies, and they cannot file return for availing the ITC on inward supplies. Then the suspension of registration is deemed to be revoked at the conclusion of cancellation proceedings. What could happen at the conclusion of cancellation proceedings? Either they will pass a cancellation order or they will allow the person to continue in the registration. Now there is one amendment here. Suppose if there is a show cause notice issued for cancellation of registration on account of non-filing of returns, and they will initiate the suspension. So within the conclusion of cancellation proceedings, at the conclusion of cancellation proceedings, either they will cancel the registration or they will drop the show cause notice. Between this suspension period, if you file the returns, then automatic revocation of suspension, you can continue in the registration. So they will not pass the cancellation order. Then Section 30 talks about revocation of cancellation of registration. So whenever a person's registration has been cancelled, so they can make an application for revocation of cancellation of registration in REG 21, and the time limit for making application is within 30 days from the date of cancellation order, and that 30 days can be extended for a further period of 30 days by additional or joint commissioner, and it can be extended for a further period of 30 days by commissioner. And suppose if the proper officer has cancelled the registration because of non-filing of returns, so non-filing of returns, then the reversal application in REG 21 can be filed only after pending returns have been filed. That is, before making application for revocation, ensure that all the pending returns are filed. Then only you can make application for revocation of cancellation. That's it. So with this, we have completed registration also. So then I think only invoice, tax invoice is there. So you can see that tax invoice is a small topic only. So section 31, you can see that e-way bill here. So e-way bill has to be generated before movement of goods. So that's it, 12. E-way bill has to be generated before movement of goods, and e-way bill is not applicable in case of exempted goods. And suppose if the value of goods does not exceed 50,000, while computing 50,000 including GST, then e-way bill not required. However, in case of goods sent on job work and handicrafts, e-way bill is always required. And e-way bill is applicable in case of movement of goods. That movement of goods may be under supply or without involving supply. And in e-way bill, there will be 2 parts. Part A contains invoice details and Part B contains transportation details. Part A should be updated by the person who is causing movement of goods, registered person. Whereas Part B should be updated within 15 days from the date of updating Part A. That is, Part B contains vehicle details. Part B may be updated by supplier, recipient or transporter, whomsoever is arranging the transportation. And for every e-way bill, there is a validity. So once the e-way bill is generated, so it will be valid for number of days, and that validity depends upon kilometers. Suppose if it is 420 kilometers, then the validity will be 3 days. How? Because 1 day for every 200 kilometers are part thereof. So the validity will be 1 day for every 200 kilometers or part thereof. If it is over dimensional cargo, like big cargos or multi-mode transportation, where one leg of the journey is by vessel, then 1 day for every 20 kilometers are part thereof. And once this e-way bill validity is expired, within 8 hours of its expiry, that e-way bill needs to be extended by giving the reason. And e-way bill cannot be generated with respect to outward supplies if return is not filed for 2 consecutive tax periods. Then In case of bill to ship to transactions, so one e-way bill itself is sufficient even though there are two supplies, and multi-vehicle updation is possible in e-way bill. That is up to some distance in one vehicle, thereafter another vehicle, we can update that in e-way bill, no need to generate separate e-way bill. Then some FAQs in this regard, that is when e-way bill is not required, if the goods transported are through non-motorized vehicle, or if the goods are transported between the customs area, that is port, airport, land customs station, container freight station, inland container depot or customs warehouse. Then transit cargo transported to or from Nepal or Bhutan, so that also do not require e-way bill. Movement of goods by Ministry of Defence. Then empty cargo containers are transported, or consignor sending the goods from the place of business to the transporter and the transporter's place to the consignee, if it is within 20 kilometers, that is weigh bridge, that is transporter's place or weigh bridge within 20 kilometers, then e-way bill is not required. And then goods being transported by rail, where the goods belong to central government, state government or local authority, goods specified as exempted from the requirement of e-way bill by the respective state government, and some notified goods, that is LPG for supply of household, that is that red color cylinders, then kerosene oil sold under PDS, postal baggage, jewelry, then gold and silver, etc. Then used personal and household effects. These are the notified goods that do not require e-way bill. Then whether that 50,000 limit is for taxable goods or exempted goods, only taxable goods. Suppose in the document if you have both taxable goods and exempted goods, take out exempted goods. Only for the taxable goods, if the value exceeds 50,000, then e-way bill is required. Who will generate e-way bill? Registered person. Suppose if the supplier is registered, that supplier will generate e-way bill. If the supplier is not registered and the recipient is registered, recipient will generate. If both are unregistered, the transporter will generate e-way bill. Suppose if supplier has not generated e-way bill because the value of supply does not exceed 50,000, the transporter should generate e-way bill if the value of all those consignments transported in the vehicle exceeds 50,000. Okay. Then next, that is with respect to this. These are the points you need to remember in e-way bill. We are continuing with the next, that is services provided to government. So here services provided to government, if you see, so there is an amendment. Previously any service provided to government or government authority or government entity in relation to the functions entrusted to it under constitution, so that service will be exempted. But now only if the services are provided to government. So that is, I am a person, I am providing services to government, and what services it is? Any service which the government has to do, any function which the government has to do as per article 243G or 243W of the constitution, and they have outsourced it to me. Now I am doing the services to the government, and for which I will be getting some consideration. That consideration will be exempted if it is a pure service. If it is a composite supply involving both goods and services, then also it will be exempted, provided the value of goods does not exceed 25% of the total. So then in that case it will be exempted. If the value of goods exceeds 25% of the total, then it will be taxable. This is one exemption. And now in relation to that, there is one circular, that is supply of wheat. So that is I am purchasing wheat and I am converting that wheat into wheat flour and I am supplying that to the government and for distribution under public distribution system, that is in ration shops. Now so I am doing two activities, that is I am supplying the wheat, which is goods, and I am converting it into wheat flour, that is services. So but definitely the value of goods exceeds 25% of the total. Due to that reason, so the exemption is not available in this case and it will be taxable. That is this CBIC circular. Then another CBIC circular is that, so for Indian Army, if we provide any services, so whether that will also come under this exemption? No, because Indian Army is not government department. Only when the services are provided to government department, that too functions entrusted to it under article 243 GRW of the constitution. But to Indian Army there is nothing that has been entrusted under the constitution. So therefore services procured by Indian Army which does not perform any functions listed under article 243 G or H of the constitution are not covered under above exemption. So this is also an amendment. Then next one, any training program for which greater than or equals to 75% of the total expenditure is borne by central government, state government or union territory. So previously 100% of the expenditure should be borne by the government. So there is a training program and I am a coaching center, I am providing the training program, and for the training program whatever is the total expenditure, out of the total expenditure, if 75% of the expenditure is borne by the government, so then in that case the service provided, that is the training program itself, is exempted. Suppose if the government is bearing 70% and the student is bearing 30%, then the exemption is not available with respect to training program. If government is bearing 80% and the student is bearing 20%, then the entire training program will be exempted. So then suppose if it is scholarship to students with disabilities, so then that service will be exempted provided entire expenditure is borne by government. So service provided by institutes or NGOs under central scheme of scholarship for students with disabilities where total expenditure is borne by the government, so then it will be exempted. Then next one we have is renting services. So in case of renting, so renting of movable property and immovable property. Movable property we have only 4 exemptions, that too with respect to motor vehicles. So renting of motor vehicles, so that can carry more than 12 passengers to a state road transport undertaking. Then renting of motor vehicle that can carry goods to a goods transport agency. Renting of electric motor vehicle that can carry more than 12 passengers to a local authority, and renting of bus to a person who provides transportation service to category 1 education institution, that is education institution up to 12th standard or equivalent. These are the 4 cases renting of motor vehicle exempted. Any other renting of mobile property will be taxable, and we have seen that in RCM. So in case of motor vehicles, if 3 conditions are satisfied, it will come under RCM, that is supplier is other than body corporate, recipient is body corporate, rate of GST is 5%. But what we are trying to understand is about the exemption. Then in relation to immovable property, so immovable property, land sale, like sale of land, but not sale of land here, transfer of, like leasing of land. So leasing of land, upfront lease amount, that is at the time when we give the land on lease, some upfront amount will be collected, that upfront amount will be exempted, provided that land is given on lease for a period of 30 years or more, and it is an industrial plot or plot for development of infrastructure for finance business by state government industrial development corporation. So state government industrial development corporation is having industrial plots, so that industrial plots is given on a long term lease. Long term lease means 30 years or more, for which they are collecting some upfront amount. That upfront amount is exempted, including the preferential location charges. Then that is an amendment. Then building, so residential property, so which one is exempted? Residential property given on residential purpose to an unregistered person is exempted. Suppose if it is given on rent to a registered person, then it will be covered under RCM. So then what if it is given to an individual for the purpose of his family stay? Individual is registered, but for the purpose of his family stay, it is deemed as given on rent to an unregistered person, and it will be exempted. Then renting of the precincts of a religious place meant for general public. So there is a precinct, like there is a religious place, and the precincts of the religious place meant for general public is given on rent for what purpose? Accommodation. If it is less than 1000 rupees per day, then it is exempted. If it is given on rent for hall, etc., so then less than 10,000 rupees per day, it will be exempted. Suppose if it is given for shops less than 10,000 rupees per month, then it is exempted. Beyond that, entirely taxable. Then RCM discussion already we made. Then sports services. In case of sports services, first point is sponsorship money received by the recognized sports body is exempted. So there is a recognized sports body that is providing sponsorship services and receive the sponsorship money. That sponsorship money received by the recognized sports body is exempted. What if it is received by an unrecognized sports body? It will be taxable. And wherever sponsorship service is taxable, if the recipient is body corporate or firm, it will be covered under RCM. If the recipient is other than body corporate or firm, it will be covered under FCM. So then we have services provided by one recognized sports body to another recognized sports body is also exempted. So for example, there is one recognized sports body, Inter-University Sports Board. So that is receiving service from BCCI, another recognized sports body. So one recognized sports body to another recognized sports body is exempted. Then services provided by an individual as a player, referee, umpire, coach or team manager to a recognized sports body is exempted. So what are recognized sports bodies? National Sports Federation, Inter-University Sports Board, then Paralympic Committee, Indian Olympic Association, Central Civil Services, Culture and Sports Board and Panchayat Sports Board. These are the 6 recognized sports bodies. Then next one, services provided by an unincorporated association or body to its members. So there is an unincorporated association or body which is providing services to its members. Suppose if that unincorporated association is a trade union, whatever money that they are collecting, that will be exempted. Suppose if that service itself is exempted service, then also that activity is exempted. Suppose if it is provided by a resident welfare association, that is apartment owners association is providing to the flat owners like common area expenses, they will be recovering in the form of maintenance charges. If that maintenance charges does not exceed 7,500 per month per member, then it is exempted. If it is exceeding 7,500 rupees, entirely it will be taxable. Suppose if that association is a trade union, okay, If it is an industrial labor or agricultural labor union, then also it will be exempted. Apart from this, for any other unions or any other association, it will be exempted if per annum the amount collected is less than or equals to 1000 rupees per member. So that is not per month, per annum. Okay, so 1000 rupees per member per annum. Then transportation of passenger service. In case of transportation of passenger service, what are exempted, that we need to remember. First, in case of railways, what is exempted? Other than AC or first class is exempted. So general ticket, second class sleeping, etc., that is exempted. Then metro, monorail and tramway is exempted. These are the two cases in case of railways. Then in case of airways, if the starting point or ending point of the passenger is in northeastern states or Bagdogra and West Bengal, but remember, only in economy class. So previously it was in economy class or business class, it was exempted, but now only in case of economy class. Then consideration received by Indian Airlines, like airline company, from that is government as viability gap funding. So that consideration received from government will be exempted for a period of 3 years from the rate of commencement of their operations. Then in case of waterways, also two exemptions are there, that is inland waterways is exempted. Then in case of coastal waters notify like people, transportation of people between the coastal waters, that is one port in India to another port in India. So for the purpose of other than tourism purpose, which means for public transportation, then it will be exempted. Then in case of roadways, three exemptions are there, that is non-AC stage carriage. So stage carriage is like it stops at every point of the journey. So point like say, so if it is from one city to another city, so in between there will be lot of towns or villages, in each place it will be stopping, that is called a stage carriage. Even local bus will be coming under stage carriage. So in case of stage carriage, AC will be taxable, non-AC is exempted. Then non-AC contract carriage is point to point travel, it starts at one place and ends at another place. Non-AC other than tourism or hire will be exempted. Then metered cab or auto rickshaw is exempted. But these three, that is non-AC stage carriage and non-AC contract carriage and metered cab or auto rickshaw, if it is through an e-commerce operator, it will be taxable. Exemption not available if this service are provided through e-commerce operator. Then in case of transportation of goods, following are exempted. Transportation of goods by railways, only specified goods is exempted. Airways, so airways outside India to India is exempted. Previously India to outside India was exempted, but now it is omitted. Then waterways, inland waterways, and in case of coastal goods, specified goods within India. Then roadways other than GTR courier agency, everything else is exempted. Then in case of GTS services, only three exemptions are there: transportation of specified goods, and then if the recipient is central government, state government, local authority registered only to deduct TDS under section 51, or if the recipient is individual, HUF or AJP not having a factory, then also it is exempted. These three cases. And what are the specified goods? If transported so by GTA and then by railways and then by waterways in coastal waters, that is exempted. So what are those specified goods? Total 6 specified goods, that is agricultural produce, food grains and flours, milk, salt, and then we have organic manure, newspapers and magazines, relief material for natural and man-made disasters, defense and military equipments. Previously railway equipment point was there, but that is not applicable. Now only 6 goods are there. Now wherever GTA is paying tax, that is wherever it is taxable, they have two options, FCM and RCM. FCM option or RCM option, they need to choose for every financial year. In case of FCM, again they have two rates, 12% with ITC and 5% without ITC. In case of RCM, always it will be 5% and the recipient will be able to take ITC with respect to that. Then we have circulars, two circulars in this case, that is whenever we are giving the vehicles on hire, and that vehicles which are giving on hire, will it come under renting of motor vehicles or contract carriage? If we are giving it for a particular period of time, then it will be called as renting of motor vehicles. Suppose if for a particular trip like that, if we are giving or per person, per trip or kilometers like that, then it will be called as contract carriage. Hiring of vehicles for transportation of their employees to and from work falls under service provided by non-AC contract carriage for hire, and the same is taxable. So because it will not come under renting of motor vehicles. And then amount collected for transportation of passengers in a private ferry in the coastal waters, that is transportation of passengers in coastal waters between places in India is exempted. So that need not be a government owned ferry, so it can be a private ferry also, the exemption will be available. That is the circular. Then import of services divide into two: OIDR services other than OIDR services. OIDR services means online information database access and retrieval services, and other than OIDR services, So remaining import of services. OIDR service will be always taxable. Who will pay GST? If it is imported by non-taxable online recipient, it will be taxable under RCM. If it is imported by other than non-taxable online recipient, then it will be taxable under FCM. So that is, if it is imported by non-taxable online recipient, sorry, it will be FCM. If it is by other than non-taxable online recipient, it will be RCM. So who is a non-taxable online recipient? Any unregistered person importing services for other than business or commerce is called as a non-taxable online recipient. Whereas other than OIDR service, again divided into two: imported by non-taxable recipient exempted, imported by other than non-taxable recipient will be taxable under RCM. Who is a non-taxable recipient? Only three people will come under non-taxable recipient, that is individual, trust and government. Individual should be unregistered importing for personal purpose, and trust section 12AA charitable trust importing for charitable activities that can be registered or unregistered under GST, and government that can be registered or unregistered under GST, and government importing services for other than business or commerce. So that is about non-taxable recipients. So OIDR means online information database access or retrieval services. Non-taxable recipient so can be individual or trust or government importing services for other than business or commerce. Non-taxable online recipient is any unregistered person importing service for any purpose other than business or commerce. So wherever GST is payable under RCM, they need to compulsorily get registered. Then construction services. So construction services, first point in construction services, construction of an individual house, only construction of an individual house, but not repairs of an individual house. Construction of an individual house, whatever may be the consideration, that consideration collected will be exempted. Whereas if it is a project covered under Housing for All Mission or Pradhana Mantri Awas Yojana, not only construction but also repair service will be exempted. Then I am transferring like TDR, FS and long-term lease, for which I get the consideration. On that I am not required to pay GST, but the promoter or builder is required to pay GST under RCM, but they have an exemption. So with respect to GST payable, proportionate to the carpet area or floor area of the units booked before completion certificate divided by total carpet area, total floor area, proportionately they will get exemption. Say for example, so you can see here value of inward supply of TDR or FSI is 10 lakhs. So on that the promoter or builder is required to pay GST under RCM. How much is the GST? 18%. So 10 lakh into 18%, 1,80,000. But in that 1,80,000 fully they don't have to pay. They will get an exemption. What is that exemption? See the carpet area. Using this TDR, FSI and long-term lease, they are constructing the building. So in that, how much is the carpet area of the building? So that is sold before completion certificate or first occupation, whichever is earlier, 28,000 square feet. What is the total carpet area on the project? 50,000 square feet. So therefore 1,80,000 into 28,000 by 50,000, 1,800,000 will be exempted. So the remaining amount GST is payable under RCM. That is 1,80,000 minus 1,800,000. The remaining 79,200 GST is payable under RCM. That is with respect to this. Then another point here is that, so whenever we are selling the building, including the land or undivided share of the land, so 1/3 from the gross value of the flat, we will get a reduction so towards the land, because GST is not payable on the land. Then next one, so GST is applicable on annuities paid for construction of a road. Generally, so we have toll charges which is exempted. Toll charges means what? Government will give the land and the builder will lay down the road, and they will be recovering that investment whatever they have incurred for laying down the road from the people who are using that road. So this is what is called as toll charges, and the toll charges is exempted. Let that toll charges, even if it is collected by way of annuity, annuity means what? Yearly some charges is collected, that is also exempted. Now instead what has happened is that government is giving land and they are asking the builder to lay down the road, and instead of collecting it from the people, they are asking to collect it from the government on an annual basis. But that is not called as toll charges, so therefore it will be taxable. That is this CBIC circular. Then advocate services. Advocate services is divided into two: individual advocate, other than senior advocate, and firm of advocates. Then second category is senior advocate and arbitrator. In case of normal advocate, that is other than senior advocate and firm of advocate, we have 4 exemptions. If they are providing services to a person other than business entity, means to an individual, that is exempted. Suppose if they are providing services to another individual advocate or firm of advocate, then also exempted. If they are providing services to central government, state government or local authority or government agency, then also it is exempted. If they are providing service to a business entity whose turnover during the previous year does not exceed the threshold limit for registration, even then it is exempted. In remaining cases it will be taxable. So which means that they are providing service to a business entity, that business entity is other than individual advocate or firm of advocate or government, and that business entity turnover during the previous year exceed threshold limit, it will be taxable, and the business entity has to pay GST under RCM. Whereas in case of senior advocate and arbitrator, only 3 exemptions are there. The first exemption, if they are providing service to an individual other than business entity, exempted. If they are providing services to central government, state government, local authority or government agency, exempted. If they are providing service to a business entity whose turnover during the previous year does not exceed threshold limit, that is exempted. In remaining cases, it will be taxable under RCM. Then we have exemptions under IGST Act. In that, 3 exemptions we have. So that is, first point, service provider, both service provider and service recipient are located outside India. Then all those services will be exempted except one service, that is transportation of goods by vessel from where to where, outside India to India. Here the service provider is transportation service provider, recipient is exporter of the goods, both are located outside India, but the goods are transported from outside India to India. So in case of this transportation service alone, even though both supplier of service and recipient of service is located outside India, it will be taxable. And who will pay GST in that case? Importer of such goods will be liable to pay GST in that case. Then second exemption is a tour operator. So who is in India is providing tour operator service to a foreign tourist, and where the tour is conducted fully outside India, then also it will be exempted. What if the tour is conducted in India? It will be taxable. What if the tour is partly in India, partly outside India? Then that proportion which is in outside India, it will be exempted. So there is a tour operator who is providing the tourist services to a foreign tourist. So tour operator service to a foreign tourist, and the tour is partly in India, partly outside India, then exemption will be available. What is that exemption? So total consideration into number of days the tour has taken place outside India divided by total number of days, or total consideration into 50%, whichever is less. So that will be the exemption available. This is an amendment. And then service provided by an intermediary, that is seller of goods outside India, recipient of goods outside India. There is an intermediary in India who is connecting the seller outside India and buyer outside India, for which they get a commission. That commission earned by the intermediary will be exempted. Then miscellaneous exempted services. So that is, I have a business and I am transferring that business as a going concern, as such, lock, stock, barrel. So as a whole or independent part thereof. Now whatever consideration, sale consideration that I get by transfer of business will be exempted. Then supply of service associated with transit cargo to Nepal and Bhutan. So transit cargo means that is like whenever goods are imported into India and it is taken to Nepal and Bhutan through a lorry, that is known as transit cargo to Nepal and Bhutan, either to Nepal and Bhutan or from Nepal and Bhutan. So the transit cargo, any service provided will be exempted. Then service by way of collecting or providing news by independent journalists. So service provided by independent journalists, Press Trust of India, United News of India will be exempted. Then there are some public libraries, that public libraries will be getting some money for the purpose of lending the books. So that money received by the public libraries is exempted, but if it is a private library, then it will be taxable. Then there is an organizer of business exhibition, and where the business exhibition is held outside India. If the business exhibition is held in India, it will be taxable. So if the business exhibition is held outside India, then it will be exempted. Then services by way of like lavatory, urinal, etc. So that public toilets, so that money collected is also exempted. Then toll charges, already we have discussed, and including overloading charges. So in case of lorries, so when they overload beyond the capacity, they need to pay extra charges, that is also exempted. And not having this fast tag, we need to pay some extra charges, even that is also exempted. Then services by a performance artist in folk or classical art form of music or dance or theatre. So there is an individual who is a performance artist. Performance artist means one who performs before the audience is called as a performance artist in folk or classical art form of music or dance or theatre, where the amount charged is up to 1,50,000 for a performance, excluding services provided by such artist as a brand ambassador. So per performance, the consideration should not exceed 1,50,000. If the artist is performing as a brand ambassador to promote a brand, then entire consideration will be taxable, even if it does not exceed 1,50,000. Then services provided by training or coaching in recreational arts. So arts and culture should be by an individual. Arts and culture should be by an individual. Training in arts, training in culture, and training in sport should be by a charitable trust. Then satellite launch services supplied by Indian Space Research Organization, Antrix Corporation or New Space India Limited will be exempted. So like remember, satellite launch service is exempted. Then some circulars in this regard. GST applicable on amount collected by guest anchors if they are registered. So there will be some guest anchors, so like Big Boss show, etc. So they will be collecting some consideration that will be taxable. We don't have any exemption with respect to that. Only renting of motor vehicle to a body corporate is covered under RCM, but contract carriage to a body corporate is not covered under RCM. Then private ferries, already we discussed that passenger transportation in coastal waters, it can be public or private, either government run ferries or private ferries, the money collected will be exempted. Now we are moving on to the remaining area, that is small topics that we have. So like payment process, returns and other miscellaneous topics. So have a look into this. Payment process. So we have two sections here, section 49 and section 50. Section 49 is related to various ledgers. So on behalf of every registered person, GST portal will be maintaining three ledgers: electronic liability ledger, electronic credit ledger and electronic cash ledger. So whatever money that comes into electronic credit ledger can be used only for payment of tax dues, whereas whatever balance that is there in electronic cash ledger can be used for payment of tax dues as well as other dues. What are the total dues of a person? Registered person will be divided into TIPFO, that is tax, interest, penalty, fees and others. So these are the total dues of a person. And balance in electronic cash ledger can be utilized for payment of tax dues as well as other dues, but the balance in electronic credit ledger can be utilized only for payment of tax dues. How money will come into credit ledger? That is, whenever we avail the ITC through 3B, so that money will come into the credit ledger which will be used for payment of liability. How money will come into the cash ledger? So whenever we make a deposit into the cash ledger, so through challan or TDS, TCS deducted by the other person recipient and refund, so that will come into cash ledger which will be used for payment of our liability ledger. And here we need to remember a few form numbers. PMT1 is electronic liability ledger, PMT2 credit ledger and PMT5 cash ledger, and PMT6 is deposit challan. PMT6 is deposit challan. And then balance in the electronic credit ledger or cash ledger after payment of interest, penalty, fee and others, if there is any balance, we will get it as a refund. And suppose if there is any discrepancy in the ledger, that will be communicated to the portal in PMT4. So total we have seen PMT1 electronic credit ledger, PMT1 liability ledger, PMT2 credit ledger, and PMT4 discrepancy, PMT5 cash ledger and PMT6 that is challan. So now special points with respect to electronic cash ledger. What are the various modes of deposit into the cash ledger? Either we can make the payment so through internet banking, debit card or credit card, or NEFT, RTGS, cash deposit over the counter, but the cash deposit over the counter is limited to 10,000 rupees per tax period, and cash deposit includes demand draft, check, etc., only 10,000 rupees, and UPA and IMPS no limit, so that is newly added. So these are the various modes of deposit through PMT6 challan. Whenever the payment is debited in the bank but not credited in the electronic cash ledger, so we will communicate that information to the payment gateway through one form, that is PMT7. And in case of transfer of balances, say for example by mistake we have deposited in IGST tax instead of CGST tax, so we can shift the balances from one cell to another cell using PMT9. And even now there is an amendment, so between distinct persons, say A Limited is having two entities, one in Tamil Nadu and one in Andhra Pradesh, so they will have two registrations. These two registrations are called as distinct persons. So from A Limited in Tamil Nadu to A Limited in Andhra Pradesh, they can shift the balances between the electronic cash ledger for that. So now it is possible, and a new form is available for that, that is PMT9A. Then special points on electronic credit ledger. So refund from the electronic credit ledger, a refund from the cash ledger, there is no restriction, anytime we will get, but the refund from credit ledger is possible only in two cases. That is in case of inverted tax structure. Inverted tax structure means what? Tax rate on outward supply is less than the tax rate on inward supply. Then second, zero rated supply. Zero rated supplies means what? Exports and supplies to SEZ. So in that case only we will get the refund from the credit ledger. And refund to the original sources, that is whenever we have paid tax by mistake and we are getting a refund of wrongly paid tax. So now the refund of wrongly paid tax will be coming proportionately to the respective ledger. Say for example, so in 2:3 ratio, 2:3 ratio, in 2:3 ratio we have made payment from credit ledger and cash ledger. So 2/5 will come into credit ledger and 3/5 will come into the cash ledger. That is this point. And for the purpose of recredit into the credit ledger, they will be passing an order in PMT3. Same way, whenever we are getting the refund of ITC, in case of zero rated supplies, we will get refund of ITC. So when we claim the refund of ITC, so the ITC balance will come down. Suppose if the refund is wrongly claimed and we are paying it back, so then again the credit ledger will increase. For that they will pass an order in PMT3A, that is an amendment. Then balance in electronic credit ledger can be used only for payment of tax but cannot be used for payment of interest, penalty, fee and others. Also balance in electronic credit ledger can be used for payment of tax under FCM. RCM liability we cannot use credit ledger. Balance available in credit ledger may be restricted for utilization by the proper officer. Accordingly, as per rule 86A, whatever ITC that we have taken into the credit ledger can be suspended for a maximum period of 1 year by the proper officer if the supplier is not in existence or not doing business from the place where they have obtained registration, or the recipient is not in existence or not doing business from the place where they have obtained registration, or they have availed ITZ without actual receipt of goods, or they have availed ITZ against an invoice for which supplier has not paid tax to the government, or invoice or debit note is not in existence. So these are the 5 cases. So supplier is missing, recipient is missing, or invoice is missing. 3 things. And then ITC availed without receipt of goods, and debit note, ITC availed against an invoice for which supplier has not paid the tax. So in these cases, the ITC availed will be disallowed for a maximum period of 1 year, and after 1 year, if that is a fake credit, it will be disallowed permanently, otherwise it will be recredited into their electronic credit ledger. Then as per rule 86B, a person whose monthly turnover exceeds 50 lakhs, monthly turnover exceeds 50 lakh rupees. So that particular person is required to pay 1% of their gross liability through electronic cash ledger, even if there is sufficient balance in the credit ledger. And what is the meaning of turnover? So we need to take taxable turnover, means we need to take out exempted turnover, non-taxable supplies, even zero rated supplies. We should see only taxable turnover. And then on the taxable turnover, 1% should be paid through cash ledger and 99% should be through credit ledger. And it is not applicable to government department. So for few people, this rule 86B is not applicable. That is government department, local authority, statutory body, or public sector undertaking. Even if a person has paid more than income tax, like income tax of more than 1 lakh in 2 preceding financial years, or if they are eligible for a refund of more than 1 lakh in the preceding financial year, or cumulatively up to the month in the current financial year, they already paid 1% through cash ledger, then 86B is not applicable. Then section 50, interest on account of delay in payment of tax. So what is the rate of interest? 18% per annum payable to government. So why this interest is payable? Either on account of delay in payment of tax or wrong availment and utilization of ITC. So delay in filing 3B. Whenever there is a delay in filing 3B, there is a delay in payment of tax. Then interest is not computed on gross liability, but interest is computed only on net liability. Net liability means what? Gross liability minus ITC plus GST under RCM. So that will be the net liability. And if tax is paid subsequent to payment of self-assessed tax, that is already we paid the self-assessed tax, we filed 3B, and thereafter we missed that particular invoice in that month. So we are paying that at a later point of time. That can be paid partly through credit ledger, partly through cash ledger, but we need to compute interest on the total liability, the gross liability. Okay. If the tax is paid subsequent to payment of self-assessed tax in 3B, interest is applicable on gross liability. Then ITC wrongly availed and utilized, we don't have to pay interest on the unutilized ITC, only on the utilized ITC we need to pay the interest. If ITC wrongly availed in a month and it is wrongly utilized for the month, interest is applicable on the portion of ITC wrongly utilized. That is, when it is called as wrongly utilized, whenever the balance in ITC falls below the wrongly availed ITC. So the balance in ITC falls below wrongly availed ITC, then it will be wrongly utilized. So that is an amendment in this case. Then the next area that we have is returns under GST. So in this returns, so first we have GSTR1. GSTR1 contains the details of outward supplies. So that details of outward supplies, if they are filing return on a monthly basis, they have to file it by 11th of the month following every month. If it is on a quarterly basis, that is QRMP, 13th of the month following every quarter. And even GSTR 3B, so GSTR 3B is to be filed by every registered person containing the details of outward supplies, inward supplies, tax payable, etc. And if they are not opting for QRMP, then 20th of the month following every month. If they are going for QRMP, 22nd or 24th of the month following every quarter. And when it is 24th, if it is south states and all, it will be 22nd, and if it is north states, it will be 24th. And remember GMCA, Gujarat, Madhya Pradesh, Chhattisgarh, and Andhra Pradesh and states below that, it will be 22nd, and others it will be 24th. And CMP8 is a return to be filed by a person opting for composition scheme. It is to be filed by 18th of the month following every quarter. GSTR4 is an annual return. That annual return is required to be filed by a person opting for composition scheme by 30th April of the succeeding financial year. GSTR5 is a return to be filed by a non-resident taxable person, and the time limit is 13th of the month following every month, or 7 days from expiry of registration, whichever is earlier, not whichever is later, whichever is earlier. Then GSTR 5A is a return to be filed by OIDR supplier located outside India, and that particular person is required to register in India, and they have to file return GSTR 5A by 20th of the month following every month, just like 3B. GSTR 6 is a return to be filed by input service distributor by 13th of the month following every month. 7 and 8 is TDS and TCS by 10th of the month following every month. 9 is an annual return. to be filed by 31st December of the succeeding financial year. 9C is a reconciliation statement. And who is required to file reconciliation statement? Only a person whose aggregate turnover during the previous year, that is for the year, exceeds 5 crores. So they are required to file reconciliation statement. Previously that reconciliation statement was audited and now it is self-assessed. GSTR 10 is a final return to be filed by a person whose registration is cancelled, and when they need to file 3 months from the date of cancellation or order of cancellation, whichever is later, not whichever is earlier, whichever is later. GSTR 11 is details of inward supplies to be furnished by a person who is having unique identification number. So unique identification number holder will get the refund of GST paid on inward supplies. So along with the refund application, they need to file GSTR 11 that contains the details of inward supplies. Then some special points on return. We have sequential filing of returns. Sequential filing of returns means what? Only when we file the GSTR 1 of the previous month, we can file the GSTR 3B of the current month. So if GSTR 1 we file for the first month, then only we can file 3B. Also, if you need to file the GSTR 1 of the next month, we should have filed the 3B of the previous month. So like that, we have sequential filing of returns. Then government on recommendations of GST Council may allow person to file GSTR 1 even if GSTR 1 is not filed for prior periods. In the following cases, even though supplier declared the details of outward supplies in GSTR 1. So whenever supplier declares the details of outward supplies in GSTR 1, that will come in 2B. But in some cases, in 2B, it will be restricted ITC. What are those cases? Supplier is a newly registered business, or they filed GSTR 1, not filed 3B, or their liability in 1 is greater than GSTR 3B, and their ITC in 3B is more than ITC in 2B, or they have received a demand notices and there is some pending tax to be paid by them. So from those suppliers, if you are making purchase, even if they have filed GSTR 1, it may come in 2B, but it will be restricted, and at a later point of time, the ITC will be available. Then who are not required to file GSTR 1 and GSTR 3B. So remember tonic, in the tonic T square. So TDS, TCS deductor, because they will be filing GSTR 7 and GSTR 8. O for OIDR supplier located outside India. N for non-resident taxable person. I for input service distributor, and C for composition scheme dealer. And who are not required to file annual return? CAG tonic. CAG is those people whose records are required to be audited by Comptroller and Auditor General. Tonic, in the tonic TDS only. TDS deductor, O for OIDR supplier, N for non-resident taxable person, I for input service distributor, C also will change. C is casual taxable person. Then next, filing of nil returns through SMS. So there are 3 returns which can be filed through SMS. What are they? GSTR 1, GSTR 3B and CMP 8 can be filed through SMS. If all the entries in this return are nil, then it will be filed through SMS. Then we have QRMP scheme. So quarterly return monthly payment scheme. So this scheme is applicable to a person whose aggregate turnover in a previous year does not exceed 5 crores. They can go for quarterly return monthly payment, and they will file GSTR 1 and 3B on a quarterly basis, 1 by 13th of the month following every quarter and 3B by 22nd or 24th of the month following every quarter. And monthly payment, they will be making payment of tax through PMT6, and that can be either using self-assessment method or fixed sum method by 25th of the month following every month for the first and second month of the quarter, because for the third month anyhow they will be filing GSTR 3B. And B2B invoices only they need to furnish, that too optional. So they can go for monthly IFF. IFF refers to invoice furnishing facility. If they want to give ITC to their recipients in the same month itself, then they can file invoice furnishing facility by 13th of the month following every month for the first and second month of the quarter, because third month anyhow they will file GSTR 1, and this is to be filed by 13th, and it is called as IFF only with respect to B2B supplies, and it will be reflected in 2A or 2B of the recipient. And QRMP scheme is GSTI invoice, which means that suppose if I have multiple registrations, for each registration I can decide whether I need to go for quarterly return monthly payment or normal returns. Then what is the time frame to opt in into the scheme? So within 1 month after commencement of the quarter and 2 months before commencement of the quarter, they need to go into opt-in for QRMP, and condition for opt-in is that last return should have been filed. And IFF when they go, so they will be giving the details of B2B supplies by 13th of the month following every month, and it is optional, but they can enter only invoices that has a value up to 50 lakhs in each month. So again they don't have to furnish in GSTR 1, otherwise all 3 months they have to furnish in GSTR 1. Payment method, fixed sum method. Fixed sum method means we will see whether the 3B is filed monthly or quarterly previous. So previous 3B filed monthly means whatever is the net liability, that much 100% we will pay as fixed sum method for the first and second month. If it is 3B, which is filed quarterly during the previous quarter, so then we will take 35% of the net liability and we will pay the 35% in the first and second month of the current quarter. Then if it is self-assessment method, they need to compute what is their actual liability and they need to discharge that liability. Compulsory opt-out during the current year, whenever the aggregate turnover in any quarter exceeds 5 crores, from the next quarter onwards they will be coming out of QRMP. And late fees so will be applicable for delay in filing GSTR1 and GSTR3B, and interest on account of short payment or non-payment under QRMP. First, in case of fixed sum method, so we have to pay tax for the first month and second month by 25th of the month following every month. If we are not paying, we need to pay interest at the rate of 18% per annum from 26th of the month. So 26th of the next month till the date of actual payment. Suppose if there is any differential amount means what? Actual amount payable for the month minus fixed sum method. If there is any difference, no need to pay interest if we discharge that liability by 22nd or 24th, that is due date of 3B. Suppose, so if we are not filing the 3B of the quarter by time, so then from 23rd or 25th, because 22nd or 24th is the due date, so 23rd or 25th, from that date till the actual date of payment we need to pay interest. But in case of self-assessment method, we have extra interest, that is on account of the differential tax, that is actual minus whatever we have deposited. On the differential amount also we need to pay interest at 18% from 26th of the month following every month till the actual date of payment. So this interest is the extra interest that we have under self-assessment method, but the other two interests will be same. Then late fee for delay in filing returns. So GSTR1 and GSTR3B, if it is nil return, 20 rupees per day subject to maximum 250 rupees. If it is other than nil return, then we need to see 25 rupees per day, but subject to maximum will change. If the turnover during previous year exceeds 5 crores, 5,000 rupees. If it does not exceed 5 crores but exceeds 1.5 crores, 2,500 rupees. If it does not exceed 1.5 crores, then it will be 1,000 rupees. Then GSTR5, 5A and 6, it will be nil return, 10 rupees per day, other than nil return 25 rupees per day, subject to maximum same 5,000 rupees. GSTR 7, it is like TDS, so 10 rupees, 25 rupees per day subject to maximum 1000, whereas TCS it will be 100 rupees per day subject to maximum 5000. GSTR 4 annual return, so nil return 10 rupees per day subject to maximum 250, other than nil return, so 25 rupees per day subject to maximum 1000. And GSTR 9 and 9C annual return by a normal person 100 rupees per day subject to maximum 0.25% of the turnover. So this is the late fee under CGST Act. The same amount of late fee is payable under SGST Act also. So now in question, in exam, be careful. Suppose if they are asking compute the late fee, you compute both under CGST as well as SGST Act. If they are asking the question only compute late fee under CGST Act, you compute only under CGST Act. Then rectification of GSTR1 and GSTR3B. So we can rectify GSTR1 and GSTR3B. What is the time limit for rectification? 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. By that time we need to rectify. Then outward supplies, how we need to report? B2B supplies always we need to report invoice wise, whereas B2C supplies we need to check interstate or intrastate. Intrastate within the state, no need to give invoice wise, consolidated. Suppose if it is interstate, again invoice value exceed 2,50,000 invoice wise. If the invoice value does not exceed 2,50,000 per invoice, then state wise consolidation needs to be done. So these are the points that we have in case of, like returns. Then e-way bill. So e-way bill is a document, it is to be generated before movement of goods, and it is not applicable in case of exempted goods, only in case of taxable goods. In case of exempted and non-taxable goods, e-way bill is not required. It is not applicable if the value of goods including GST does not exceed 50,000 rupees. So if the value of goods including GST exceeds 50,000, then only e-way bill is required. However, in case of handicrafts and goods sent on job work, even if the value does not exceed 50,000, e-way bill is required. Then it is applicable in case of movement of goods, whether it is under supply or without involving any supply. So if the taxable goods are moved from one place to another place, whether it is under supply or without supply, e-way bill is required. And e-way bill will have two parts. Part A will contain the invoice details and part B will contain the vehicle details. Part A should be updated by registered person causing movement of goods, and part B will be updated within 15 days from the date of updation of part A. And who will update part B? Either supplier if it is own vehicle, or transporter if it is a hired vehicle. Then validity of e-way bill. Once the e-way bill is generated, both part A and part B, so it will have a validity. The validity will be counted as 1 day for every 200 kilometers or part thereof, And if it is over dimensional cargo or multi-mode transportation which involves one leg of the journey by waterways, then 1 day for every 20 kilometers are part thereof. And once a validity expires, it can be extended within 8 hours from its expiry. And e-way bill cannot be generated with respect to outward supplies if I have not filed returns for consecutive 2 tax periods. If I have not filed returns, I cannot generate the e-way bill, means my e-way bill will be blocked. In case of bill to ship to transactions, so one e-way bill is sufficient, because even in case of bill to ship to transactions, even though there are 2 supplies, one from the original supplier to the billing address, second between billing address and the shipping address, but one e-way bill is sufficient. Then in single e-way bill itself, multi-vehicle updation up to some distance, one vehicle and thereafter another vehicle, multi-vehicle updation is possible in e-way bill. Then FAQs on e-way bill, when e-way bill is not required. If I am transporting the goods by non-motorized vehicle, it's like bullock carts, horse carts, etc., or if the goods are transported which are under customs control or transit cargo to Nepal and Bhutan, or movement of goods which belongs to Ministry of Defence, or empty cargo containers, or we are taking the goods to a weigh bridge which is within 20 kilometers, and goods transported where the goods belongs to railways, like in railways by central government, state government, then goods specified as exempted from e-way bill by the state government, and some other specified goods like LPG cylinders, kerosene oil, postal baggage, then jewelry and natural cultured perils, used or personal household effects. So these goods transported do not require e-way bill. Then whether the 50,000 limit is for taxable goods or exempted goods, only for taxable goods. If a document contains both taxable goods and exempted goods, take out the exempted goods, see only the taxable goods, and if the value exceeds 50,000, then e-way bill is required. Who will generate e-way bill? Registered person who is causing movement of goods. So suppose if the supplier is unregistered and recipient is registered, recipient will generate e-way bill. What if both are unregistered? The transporter will generate e-way bill. Okay. Then whether transporter is required to generate e-way bill, if supplier has not generated e-way bill because the value of consignment does not exceed 50,000. Suppose if there are 10 people who hand over the consignments to a lorry person, and each consignor value does not exceed 50,000, but the value of all these consignments put together exceeds 50,000 in the lorry. So then in that case, the transporter has to generate the e-way bill for each consignment. Okay. Then last area that we have is GST practitioner. It's a simple thing. So what are all the activities that a GST practitioner can do? They can apply for registration, they can file returns, or they can make application for refund or make payment of tax. They can act as authorized representative. In addition to that, they can furnish details for generation of e-way bill, and they can furnish the details of goods sent on job work and received from job work, and they can file an application for amendment or cancellation of unique enrollment number. They can file an intimation to pay tax under composition scheme or withdraw from composition scheme. And what are the conditions to become a GST practitioner? They should be citizen of India, person of sound mind, and not adjudged as insolvent, and not convicted by a court. So for imprisonment, so like less than 2 years. Then responsibility for correctness of particulars, whatever returns that are filed by the GST practitioner, the responsibility is with the registered person, not with the GST practitioner. So this is the end. We completed this rocket revision, the last minute marathon, and see, I have made it fast because, so this is only a last minute revision because already I uploaded the fast track batch, and due to that reason, this is quickly, in order to revise everything in less than 4 hours, I have just made this rocket revision for you for last minute revision. So all the very best for your exam, prepare well and do your best.